Are you finding Sage 50 accounting software difficult? Worry no more. We've made this video easy and a step-by-step process. Watch now. Welcome you. Today we are going to look at one critical thing. Like I told you, the essence of sending the software and the serial code is for you to learn on your own how to install Sage 50 and also how to create a company. So with my video, the video on the YouTube, it can guide you, seamlessly. You don't need anybody's help. It should as long as today's training is concerned, you are already a Sage consultant. The only difference between you and I is the technical part. Okay, that is where the main headache is. But in terms of installing a software, in terms of creating a company, you are sure on the right path. Please, whenever my voice is going down, please let me know. And whenever you lost my screen, because I'm going to share it right now, you let me know. So this training is in 5 stages. And within these 2 days, we are going to cover the 5 stages of this training. You have already done 2 for me. You have installed the software and you have also created a new company. So the first 2 are out of the option list. Now the second one is where the third one, is where I'm starting from right now, which is the setup. Remember, if you have followed our QuickBook class, I keep hammering on the setup. Everything revolves around the setup. Once you can set it up, then you are good to go. So I'm going to share my screen right now. I'm going to share my screen. Okay, can you see my screen? Can you see my screen? So please, if you have not gotten the software, please bear with me. It's not easy for me because I have to work till 1 a.m. this morning. I also have to take care of some of my online classes. I teach people in different countries, in different continents. So it's not easy for me. Please pardon me. At the end of this class, I assure you that you will get your own copy of the software and you will get the activation key. Please, what you will do for me is to send your email. Just send your email to the mail on that on our WhatsApp group. I've copied that mail many times. Or after the training, I will still copy it once again, just in case you have not gotten your software and the serial key so that you can do the installation and creating a new company by yourself. Please just be patient. After this class, you will have all of them. I have to also attend to other customers. Remember, while we are also doing the free classes, some other people are paying for the master classes, so we have to also give them priority as well. So thank you very much for being there. So once again, I welcome you to Sage 50 software training. Now I will go straight to the main thing because I want to start working. My every part of my body wants to work. Now I have overemphasized on this, what you are looking at on your screen. How to process every accounting software, no matter the type of accounting software. There are 3 layers you can always understand. One is the setup. The setup is when you bring in everything that the software will need to work. That is the setup. Everything that the software will need to work is all about the setup. Okay, like the customer names, the vendor names, the employee names, your chart of account, that is the ledger, very key as an accountant. That's the foundation of accounting. Okay, your budgeting, your jobs, every information that you will know that the software will need in order to, deliver quality job. That is the setup. Now, the posting has to do with you filling the software with all the transaction going on about concerning your business. Every transaction your business is engaging in, selling on credit, buying on credit, paying vendors, receiving money from customers, paying salary, paying all manner of expenses. That is what comes under posting transaction. Then at the end of the day, the software will now produce reports for you. The essence of the software is to help you generate accurate financial reports or near accurate financial report on real time, immediately. So you don't need to wait for 30 days for your accountant to produce report. I don't need to wait for the next 1 week, the next 20 days. I can have my report right now as a business owner. Now, it may interest you to know that among these three segments, the first two are your responsibility as the person operating the software. Setup and posting transactions are your responsibility. Setup and posting transactions are your responsibility. So it is your responsibility to set up the software. Please, are you seeing my screen? I can see a message here. Are you seeing my screen, please? Please, I want to carry everybody along. Please text clear to me, or just text I can see your screen so that we can soldier on. Okay, Mr. Jeremiah has commented. Good. What of my voice? Is it clear enough? Is my voice clear enough? Okay, thank you very much. So like I said, the first two, if you can see my mouse, the setup and the posting transaction, they are your responsibility. That is where your experience, your concentration, your knowledge of accounting, your understanding of business, and your focus is needed, so that everything that will come in the first two will be perfect information. So the system, the software uses the first two to now generate the reports for you. The software uses the first two to generate accurate report that will make sense to the business. Now let's look at today's case study. It's a bit different from QuickBooks. They are the same. QuickBooks and Sage, even Tally and all of them, they produce the same answer, okay? But the methodology differs. The methodology differs. Sometimes as an accountant, you notice that Sage 50 demands more from you. Sage 50 demands more from you as an accountant than any other software. It demands more. It takes more from you. It wants you to have that grasp as an accountant. Now, one of the secrets I learned over the years is that without good knowledge of accounting laws, accounting might not be sweet in your mouth. It's like going to a country, you don't understand their constitution. You'll be having problem with the security agencies. So accounting laws is key. Accountants, listen to me. Go back, sit down, take your time and understand the laws, the principles, the fundamentals, and the concept of accounting. If you're able to understand this, I bet you, accounting is one of the sweetest things I enjoy doing. It gives me joy. So let's go back to our course. So the next slide. Now, this is how we are going to do the setup. The setup is always in two ways. We have the non-human data. So that is information that the software does not have, that you are bringing in, the non-human data. I will call it the non-financial data. Then you have the human data. It has to do with your customers, your vendors, and your employees. So under the non-human data, you have the chart of accounts, you have the inventory, you have the budget, and you have the VAT. There are many things you can do there actually. I just have to zero in on these four because we are going to touch them. Then the next slide looks at the transaction, posting of transaction. So whenever we are posting transaction, how does it look like? What are we actually posting? Now, number one is you can post non-commercial documents like quotation, estimates, proposals, Okay, they are not commercial documents. No accountant records anything from them. They are for filing. They are evidence. They are just transactional evidence, and evidence to show that a transaction was initiated. It might not end in commercial document, but it was initiated. Then you have the actual document, actual business document, which is the commercial document. That is those receipts, invoices, credit notes that you deliver to your customers. Those ones are called commercial document because it is from there you can now debit and credit in your books of account. Whenever a business exchanges commercial document, automatically the books of account are activated because those information are going straight into the books of account, into the ledgers and every other thing. Then on the side of the vendors, you receive invoice from them. Basically, you receive commercial documents from your vendors, like the invoice, the payment, the pay bills, and the rest. Then the internal activities of the business, okay? The internal activities, the internal document of the business, like the journals. Journals are internal document of the business. I don't share it with outsiders. When I transfer funds from bank to cash, cash to bank, I don't need to go and tell outsiders I have done that. So these are internal issues, voiding of checks and bank reconciliation. Name them, there are many. So they are internal. Petty cash operations, those things are internal. So it is within the organization. Good. Now, lastly, remember, this is what we'll be achieving today, setting up the business. Then tomorrow, we will go into posting transactions. Then after posting transactions, we can now review our reports. Okay, from the questions, from the case study, if you have your case study, from the case study, I have already extracted the names, the non-human data. That is the chart of account. You can see it on the screen there. I've already extracted the chart of account. I've also extracted the inventory of that the company sells. Then the next one are the human data, the names of the customers, names of vendors, and names of employees. Yes, I've already extracted all of these so that it will be easy for me to do my posting. I don't need to be changing the screen. Then, having said all this, let's go in. Okay, please don't forget to subscribe to our pages. I have a lot of questions students have asked that I'm working on their videos now. Somebody asked, how can you, impute, how can you effect tax, input tax in QuickBooks, which the video I'm currently, both input and output tax in QuickBooks, I'm currently working on it, so that it will get to you. Now, computer accountant is created by Leadway Training and Technology Institute as more like an NGO, but it's not an NGO in terms of registration, just to help those who are coming into accounting tech to get that proper foundation. Okay, so we run beginners classes, which is basically free these days, and we have master classes which looks at the technical side of this software. Possibly you want to use it as a business, you want to go into it as a business, and you want to become a consultant. We provide master classes. So very soon our master classes will be coming in online. For now, most of them are basically physical classes, but very soon, from next month, they will be coming in online. Then after this class, after this training on CH50, there is going to be a challenge. I'm going to give us a question. Now, your duty is to solve it on QuickBooks, solve it on Sage. If you get the same answer, if you are able to decode the secret in that question and get the same answer in both QuickBooks and Sage, you are entitled to 2 masterclass training on both QuickBooks and Sage 50. Let me repeat it again. Hello, are you hearing me? Hello, are you hearing me? Please indicate if you are hearing me, please. Can you hear me, please? Please. Okay, that's good. Ayodele Ademola, thank you very much. Happiness Ebere, Kayode Adewale, thank you very much. Zachary Daniel, yeah, I can thank you that all of you are hearing me. Please, I was making a point before I go into the practical proper, and I was saying after this class there is going to be a challenge. I have a question. Over the years I've been training students, nobody has been able to get this question, and I brag about it. So I'm going to put it up as a challenge. Now, what you have to do is to solve the question on QuickBooks, solve it on Sage. If you are able to get the same answer and also able to decode a certain line, an accounting line that demands your business knowledge, if you're able to get the answer and it tallies with mine, you will be entitled to 2 masterclass training. The technical side of this software, you will get it for free. Both Sage and QuickBooks, we will train you for free without paying a dime. The winner of that challenge will be entitled to such gesture. Please don't forget to subscribe our page. Please encourage us to do more. Don't forget to comment. Don't forget to like and share to as many people that you want to access this useful content. Thank you so much. So let's dive into the main work. So if you have installed your software, if you have created your company, this is exactly where the software will bring you to. This is where it will bring you to. QuickBooks Business, Sage 50 Business Environment. This is exactly where the software will bring you to. So if you are seeing my screen right now, or if you are using 2 laptops, or if you are using one, you have to be, navigating. This is exactly what you should be seeing on your screen. Okay, once you install the software and create a new company, it will bring you to this page. Okay, this is called the home page or Sage 50 Business Environment. This is where the setup begins. Okay, now at the extreme top, you can see the name of my company, Capital Enterprise Limited, and the name of the software I'm using, Sage 50 Accounting. Yes, somebody is just asking, can we get it? Yes, I'm going to send you the QuickBooks. Exactly, I'm going to upload the QuickBooks. Please, for those that have sent their email earlier, you don't need to send again. I already have your email in our database. I will send the QuickBooks to everybody. It's a challenge. Everybody, I want everybody to participate. And I want you to see how this software can make you think like a normal business, like a business person. So don't bother yourself, don't worry yourself. Everybody will get the QuickBooks software and everybody will get the Sage 50 software. I'm not going to leave anybody behind. Thank you very much for that message, Mr. Roberts. Thank you very much. Okay, so let's dive in. Now, at the extreme top is the name of the company and the software I'm using. Now you can see the logo of the company red in color, okay? Then the control buttons. That segment where the name of the company is called the title bar. Please, people are still sending messages on the serial number. Please don't worry yourself, you will get it. All you have to do for me, if you have not sent your email, please email it to leadwaytechnology@gmail.com. I will still, if you are not part of our WhatsApp group, please do well to join our WhatsApp group. Most times these updates are easier for me to drop there. Even the challenge, if you're not in the WhatsApp group, I will not make it a social media thing. It will be only for those in the WhatsApp group. So if you're in our WhatsApp group, you are entitled, automatically qualify for the challenge. But I also made a space in that WhatsApp group. You are free to invite anybody you want to benefit from this. You are also free to invite anybody you want to benefit. So you will get the books, you will get the Sage 50 for those that have not gotten that. I assure you. Thank you very much. So let's go back to our work now. Where you have the company name is known as the title bar. Now, directly under the title bar, where you have file, edit, list, maintain, tax, analysis, options, report, and forms, that line is called the menu bar. The menu, like menu, they when you go to a hotel, they give you their menu book. So that's it. So the menu bar contains different commands: file command, edit command, list command, maintain command. Now, every menu has a sub command. You can see when you click on file, it drops down, showing you the sub command. When you click on maintain, it drops down. Tax, it drops. So every menu has a sub menu, and the actual work is done in the sub menu. The actual work is done in the sub menu. Okay, good. Now, by my left hand side, look at the rectangular bar there. Look at that rectangular bar that is gray in color. It's called the navigation bar. That rectangular bar is called the navigation bar. So it's showing you my dashboard. You can see my dashboard is empty. I'm sure most of you have installed their own. Their dashboard will have something. So I can customize my dashboard. I can bring in things I want to see on my. I want to see all account balances. I want to see people I'm owing. I want to see those who are owing me. I want to see what again? I want to see. Let me go to my report. I want to see my revenue to date. Just a summary. I want to see my customers for the last 12 months, vendors for. I think I'm okay with this. So you add them. You add what you want to see. Add. Then I'll click OK. So you can see that my dashboard is looking like your own. Good. Now it's virtually empty because I have not done anything on it. So let's go back to the navigation bar. So you have the customer and sales bar. Okay, it contains all the customers' data and all the sales that have been made to the customer. The following is the vendor and purchases bar. So it contains the names of your vendors and all the transactions done between you and the vendor. Then you have the inventory section. It contains the names of your items, the names of the service you render. Okay, now again you have the employees, the job, the banking, names of your bank, the account balances. Okay, so these are the content of the navigation bar. Why this is the home page. So you can see the system date. It copies my system date. Once your laptop date is correct, it picks it immediately. And we are on period 6, which is July. June. We are on June, so that's why it's showing you period 6. So it is. You can always change them. When a new period comes, you can always come back and change. That's the essence. So that it makes the software to be current with what you are doing. Now, please pay attention to what I'm going to say. Mr. Benane, don't worry yourself. I will resend the setup back to our WhatsApp page. If you are in our WhatsApp page, you will have noticed that I sent a copy of that Sage 50 setup so that it will be easy for you to download. But don't worry yourself. All these things will be sorted out. Okay. Thank you very much. Some students said I should go on. So for the very last time, I'm not going to repeat this. Apologies to everybody. If you have not gotten your software, both QuickBooks and Sage, please don't worry yourself. Calm down, follow the class, follow us, just focus on what we are doing. Be rest assured that you will get it. You didn't ask for it. I decided to give it out, so you will get it. Okay, thank you very much. Okay, so let's go. Now look at the menu bars. Okay, if you go to the file menu, you see this is where, let's assume I want to create another company. While this one is open, I can just click on new company. You can close it from here. You can open a company directly. Okay, I'm just looking for an exact company to open. I'm not looking for all of them. You can also go back and open previous company. You can see the companies I've opened before, the previous company. Then you have the print preview, you print, you do your backup, restore, and the rest. Okay, then edit edit does only one function. It plays just a role. It helps you to investigate and find a report. That is what edit does. So I'm looking for a particular transaction I have instructed my staff to record on a certain date. I just want to be sure that they have done that. Then I can just use edit to track that transaction. I can also use it to track name, transaction, or report. Good. Now, list has to do, it's just a listing device of all customer names and their transactions. So you can see everything you have here is more like a list: customer list, contact list, quotation list, proposal list, sales order list, sales invoices list, and the rest. The same thing applies to vendor. All you are tracking, all you are zeroing in on are just the lists of every activity you have done on this software. Please, this is where the critical thing starts. Maintain is where you do all the setup. Remember, I have listed all the setup. So this is where you execute, or where you key in both the human and non-human data. Maintain is the menu bar that enables you to key in both the human and non-human data. That is the work of maintain. So if you call it setup menu, you are also right. That's what maintain does. It is where you key in all non-financial records or non-financial data. Following it is the tax. Okay, tax is where you do your day-to-day accounting work. Everything about posting transactions, is in tax. Everything about posting transaction is in tax. This is where you do all your day-to-day accounting activities. So it is done in tax. Good. Then there's one thing people have not noticed. And that is analysis. Whether you call it financial analysis, data analysis, that these softwares, they come with inbuilt analysis. Okay, it's in Tally, it's in QuickBooks, it's in virtually all of this software. People don't even know that these softwares has a part of them that are data analysis in nature or financial analysis in nature. So all the postings, all the transactions you've done, they will use it to do analysis for you. A typical example is your current ratio. The system can show you the current ratio of this business. Okay, good. So this is, we will be looking at it by tomorrow when we are done with our postings. Then you have the options. This is technical in nature. I may not go, but the major thing is that you can change your date from here. Then the almighty report. Let me also make it clear. When you invest your millions or your thousands in this software, it is to get a real-time report. The essence of this software is to help the management, The essence of this software is to help the management get report on time for effective managerial decision making. Because business is sweet when the management can have their realities on their table as it's going on, then they can make informed and reliable business decisions. So this is where we'll come to check all report. Now, it might look small to you, the subs can look small to you. Sage 50 has more than 125 different reports. So you have more than enough. You have more than enough reports in your hands to make good business decision. So this is their business online. Windows, I'm just on one window, help, live chat, and the rest. So Having said this, please, I hope we have all of these. I hope you have your case study in your hands. Now, the first thing to start working on is your setup. Setup, I have just showed you, has to do with your charts of account. So we start from the chart of account. Charts of account or ledgers or account head are the foundation of accounting. Without them, accounting is useless. Without them, we accountants, we are also useless. We will just become like any other employee within the business. For your account to make sense, all the transactions must find their way inside different charts of account or ledgers through a process called double entry system, debit and credit. They must find their ways into different accounts through a process called debit and credit. So for me to set up my Sage, my content, I'll click on maintain. You click on maintain, okay, and select charts of account. That's always the first thing. Please note it. It's always the number one thing. If you remember when we did the QuickBooks class, that was the number one thing we set up, so that our report, our transactions will have a foundation. Is the foundation of this application. Without it, you are just working on Excel. Okay, so I'll click. Good. So this is it. This is it. So that I can have more space. So this is it. Now you can see there are three bars there. There are three rows there. The account ID, the description, and the account type. Some of you who attended the QuickBooks class, I have already explained all of these, but I will do a summary. Now, based on company policy, I can go ahead and just be typing rent and go on. But the essence of this is that it allows your charts of account to be well structured, to be clean and look well arranged. So the account ID is the number that the user assigns to each ledger. Most businesses, based on their accounting and business policy, is a clause that you must assign numbers to accounts so that you don't just be creating accounts indiscriminately. And that is how a standard company works. Numbers must be assigned to the charts or ledgers. Now, I'm going to start from 100, okay? So the first ledger on the list is cash at bank. So I'll assign it 1000. Now, you can also be dynamic with this number. I can also say cap slash, that is the name of the business I'm working on, cap slash 01 slash 0001. It depends on the business. Businesses determine how the account ID should look like. Okay? Please, as an accountant, I emphasize on this. Now that you are the only accountant in a business does not give you the right to just be creating whatever you like. Make sure it gets managerial approval so that you don't also rubbish yourself on the day of audit. An auditor will just find those things funny. Then you look as if you don't know what you are doing in the presence of the manager. Please get approval from the management that you want to label the charts. So, okay, work with the management team. So I'm going to, for time, I'm going to use direct number. So 1000. The first on the list is cash. Please, I'm going to use capital letter, cash at hand. Okay, now cash at hand is a cash at account. Okay, then save and new. If you click save, okay, it will save. This blue highlight simply means that it has saved. Once you click on save and you can see this blue highlight, it means that the system is already in the system. But because we have many accounts we are creating, we'll normally employ the services of save and new so that it will save, then clear the text boxes for us to enter another one. So 01001, that is spiritual bank. spiritual bank. Okay, spiritual bank is a cash account issue. It belongs to cash, but in as much as it is being managed by a financial representative in the name of our banks. Okay, but it's a cash account. So select save and new. The next one is VAT 1003. Whether you call it VAT, or I can also put the other name / sales tax. Okay, so depending on the region of the world where you are, so the one that suits you. Now it is a liability account. It is not what belongs to the business. It is a funnel through which the business uses to extract consumption tax or levy from the consumer and remit it to the government. So it's a funnel. So the business is acting as a tax registrant on behalf of the government. So because the government cannot be everywhere collecting tax, so they give instruction to businesses to act as their representative. So they collect those consumption tax, okay, through this account on the screen, then remit to the government. So as long as that money is within the business, it is a liability to the business. So we look for other current liability because it's a current liability. It stays for some few more time and it's remitted. Other current liability. So save and new. Then the next on the line 1004, we have equity or capital. So I'll put the two names. So anyone that works for you, capital or then equity. Now this is where, please pay attention to what I'm going to show you. Now naturally, if you remember your accounting equation where it says asset equal to capital, right? Or asset equal to capital plus liability. Good. The right account to select is equity return earning. That is, capital is returned. It is returned continuously in the business. Now, if you don't do it, the software will mandate you to come and create it. Now, there are other two equities there. Let me explain them. The first one is equity doesn't close. So if I have other investments, ordinary shares, preference shares, debentures, and the rest, okay, they can serve as equity doesn't close because they will remain there with the normal capital of the owner year in, year out. Then the last equity is equity gets closed. This is what the one we use to record drawings. It has to do with drawings or any account that shows that the owner is taking out money from the business. Example is drawings. So when you create drawings will go to equity gets closed. That means that it is closed on that period it was drawn. Do you know that capital can be carried forward year after year, but drawings cannot be? Drawings is closed. That money is closed on the period it was taken. Okay, so this is it. Save and new. I hope once again I'm loud and clear. Please carry along. I hope everybody is hearing me loud and clear. Please carry me along. A simple text will ginger me. Carry me along. Is my voice and picture quality clear? Okay, thank you, Mr. Gabriel. I'm grateful. Thank you so much. So let me continue. 1005. Okay, thank you, Mr. Gabriel. I appreciate. Thank you, Mr. Jeremiah. Thank you so much. So please don't mind my cap. I'm aging, so I'm just covering my white hair. Don't mind my cap. It's covering the white hair. Age is no longer on my side. Thank you so much for encouraging me. Please don't forget to subscribe. Please don't forget. We want you to continually be part of us, and we want to give you the best we can. Don't forget to subscribe. Don't forget to comment. Don't forget to like. Don't forget to share. Don't forget to invite people to our WhatsApp page. All this we appreciate and we celebrate all of you. Thank you very much. Let's zoom in again. So 1005, I have revenue. So slash sales, it depends on the name that works in the part of the world where you belong to, slash sales, okay, slash income, whatever works for you, then you run with it. So now revenue it belongs to the accounting pillar called income. Remember I told you in the last QuickBooks that there are 5 pillars of accounting: income, expense, asset, liability, equity. So income belongs to that pillar called income. So revenue, it is the account that captures the remuneration or the payment from our customers for item or services rendered to them. So I'm going to look for income here, letter I. This is it, income. I'm good. So I'll click save and new. The next on the line is purchases, 1006. So I have purchases. So based on the new IFRS stuff, I've seen a cost of sales a lot. Okay, so the one that works for you, you can use purchases, you can use cost of sales. Now, they belong in the accounting pillar called expenses. Purchases or cost of sales, they fall under expenses, but technically we deploy them under trading expenses. So that's why you have the word cost of sales come. It is the account that captures money spent in acquiring items to be resold or money spent in acquiring services from a vendor. Okay, so if it has to do with items to be resold, it falls under trading account. So that's why you have this cost of sales, what it costs us to bring in our sales items. So it falls under cost of sales, which is more like an expenses. Okay, save and new, 1007. So you have rent. Rent is paid, which is a administrative expense or managerial expense, as the case may be. Okay, so rent goes directly to the expense of the business. Mr. Adebayo says the pictures are not clear. Is it from the one shared or from my face? If it's my face, don't bother. It's no longer young. It was 5 years ago. But if it is about the screen, I can reshare the screen. So if it is my picture, Mr. Adebayo, don't worry yourself. I was some 2-3 years ago, I was very young. Now I'm now hiding away from nature. Okay, so let's go. Then the next one is 1008. You have electricity bill. Electricity bill. Okay, which is also an expense, an admin expense or operational expense, depending on where your company. Okay, Mr. Adebayo, Mr. Jeremiah is saying that you should look at the edits on your YouTube to increase the quality. Okay, that's what it's just an advice so that you can do the necessary adjustment. Okay. Mindshift said it's clear from his end. Okay, so let's go because I want us to finish this setup, then prepare ourselves for the posting tomorrow. My target is in the next before 12 o'clock we should be done with this. But note, in real life, setup is not a tea party. Setup can keep you for the next 2-3 days depending on the voluminous activities of that organization. So let's go in. Electricity is taken care of. 1009. So I have salaries. Okay, so which is also admin expense. Then you have Toyota car. Toyota car is more of an asset to the business. Okay, so Toyota car it falls under the pillar of accounting called fixed asset, which simply means the property you owe that you use in running your business. So it belongs to the business. So we use it in making the business, progress and move forward. So it falls under fixed assets. Then we have 011. Sorry. Then we have laptop, which is an asset, fixed asset as well. Then followed by inventory, 1012. We have inventory. I remember my school night teacher, you say inventory. So inventory. So we have, let's look for inventory. Please, the way I'm setting these things, please, this is how it is in real life. Unless the company policy says otherwise. Okay, Mr. Eric, I think you should follow Mr. Jeremiah's advice that you should look at the edit on YouTube to increase the quality. Okay, so the way I'm doing this thing is actually the way it is in real life. Unless your company will not say, no, don't put inventory as a current asset, put it as expense. That is their internal problem. Okay, but accounting wise, this is how, this sake of this software, this is how it should be. Okay, then we have account payable, that is creditors account, 1013. I hope I got it. Yeah, 13. So we have accounts, I'm going to abbreviate it, accounts payable. Then accounts payable belongs to the accounting pillar called liabilities. Okay, because it's an account that captures what you are owing your suppliers or creditors or vendors. So we look for current liability. Look at it, other current liabilities. That is where it falls under, say, 1014. Then you have accounts receivable. This is the account that captures the debt or the unpaid balances or invoices amount from your customer. So it's a liability against your customer. So it captures what the customer is owing us or owing the business. So we go to other current assets. Now something is there. Account receivable falls under account receivable, which is so I'm going to correct the other one. Account receivable falls under account receivable, and account receivable is a current asset issue. Okay. Now there is I'm going to correct the account payable. It shouldn't fall under current liability. Yeah, this is it. It falls under account payable, falls under account payable as an account. Then account payable comes under other current liabilities. So this is how it should be. Good. So you see, one unique thing about this, when you are good in it, ability to dictate your mistakes will be there immediately. Once I see, my mind knows that I have done something that is not okay, so I can quickly call back. Then last on the list is drawings. Okay, so we have drawings, drawer. So whatever name, drawings / withdrawal. So whatever name you want to give it or your company assigns, it works. Now it falls under equity gets closed. I told you it is only reported in the period it was drawn. Okay, so it's not what the software cannot even allow you to be carrying it over. So if the owner took money in February, it will only reflect in February account. The balance of the capital is what is being rolled over. Okay, so we are good to go. So all the charts is done. In real life, you can't go ahead, you can't go on and be creating charts forever. As business responsibilities are expanding, ledgers, account names are appearing, then you continue to create. So let's look at the list. Let's look at what I have done so far. So this is the list. So far so good. I have 15 ledgers. Okay, I have seen companies with 75, 100, 200. Sometimes the volume, most of those names there are not even necessary. So they keep creating, and it's funny. Okay, so you can see the list. You can see that my numbers are in order. Okay, so you can see what I have done here so far. All the balances are zero because we have not done anything. Good. So this is settled. Chart of account is settled. So I can take one to create is the inventory. Remember, data will now go to the human data. So we are going to create the inventory, names of the item we sell in the business. So we have hair creams, we have red shoes, and we have body creams. Mr. Mario says, please, sorry, I missed how you entered the setup part. Mr. Marius, can you make it more specific so that I can just go straight to where your answer is? Okay, now for any edit you make in the chart of account, you must save it to overwrite the former one. So Mr. Marius Chibozo, just help me be specific enough so that I can just get to your answer. Okay, so let's go in. So from the business has hair creams, red and body creams. So that's the three products they buy and resell to customers. So we are going to create them. The setup is in maintain. So I'll go back to maintain. Items. Good. I'll click on inventory items. So this is it. Now you can see item ID is blinking. The session point is already there. The description, the item class, and the rest. Now I'm creating hair creams first. Now based on company policy too, your company can, maybe your items are tagged. Okay, they are tagged in number. Okay, but I prefer using the direct names, maybe with some distinctions here and there. So you have hair cream, you have hair cream, hey, behave yourself. Okay, so hair creams, I don't know what is wrong with my hands. Okay, so hair creams. Now, this is the name of the item. It's just like code, the code. So I'll copy it and paste. This is what appears in the description column of your invoice. Okay. Now, what type of what class of item is this? It's a stock item. Okay, it's a stock item. Good. Now I'm going into the question to find out how much, what is the selling price of this item, right? So from the selling price, hair cream, we have there is 3,000, there is 4,000. So I'm going with the 3,000. You know why I'm going with the 3,000? The 4,000 was, okay, it's 4,000. Yeah, actually, is 4,000. Good. It's 4,000. So 4,000, that's the selling price. Then the cost price of hair cream is 2,000. Okay. Now, this is where the main thing is. Forget about the cost price, selling, those things are data. You may or may not enter it here. because the most important place to enter it is your invoice or receipt, as the case may be. So whether you enter it here or not, it doesn't really matter. What actually matters, two key things are: one, Lord, watch the name of the item and the item class, and this place. This is the two key things. If you don't get this place right, forget it. It's not going to your report will be fun. You'll be looking at your report, you'll be laughing at yourself at the same time. Now watch this. This area, this is what determines your gross profit. What the ledgers you bring in here are what determines the trading account or gross profit. Now, the first is saying GL. GL means General Ledger Sales Account. So it's calling on you to link the revenue account. You can see the name there. That is the place where you link the revenue account. The second one is the inventory account. You can see the names are appearing by this side. You can see it. Now, followed by the cost of sales. Please note this very well. If it is a trading business, if it is a retail business, if it is a manufacturing business, if it's a buying and selling business, this is how it is. Now, the implication is that, look at the implication. If sales minus purchases will give you gross profit, then as you are selling, inventory will be dropping. If you buy more items, inventory will be going up. That is just how this is. So the upward and downward movement of your inventory keeps enriching the sales and the purchases. As long as the sales is being matched to purchases, periodicity concept, it produces gross profit. It produces gross profit. Okay, Mr. Marius, I got you, chart of accounts. Okay, remind me once we are done at the last lap of this class, I will revisit it again. Okay, so please, I hope this is clear. Then I will save this item. Save. Okay, there is no save and new here, please. They are all one feature. So you save first. The blue highlight tells you that it is already in the system. To create a new one, you click on new. Okay, so the next item name there is red shoes. Red shoes. Okay, so red shoes. Red shoes. You can also copy it or you can retype it. It's also a stock item. It's also a stock item. Then what's this selling price? The selling price of red shoes is it was sold to Peterson. Selling price is 4,000. The same thing, you repeat the same thing. Link it to your revenue. Okay. Then link to your purchases. Perfect. Your setup is perfect and your postings are perfect. Go and sleep. Your report will be over perfect. So perfect plus perfect equals over perfect. Please, once your setup is perfectly delivered and your postings are perfectly entered, just sleep. Remember this underlining word: garbage in, garbage out. But you garbage in perfectly so that the software will garbage out perfectly. Okay, so this is done. Save. Then new. So the next on the line is body lotion. Body lotions. Body lotions, yeah, correct. So Control C, Control V, stock item, then the same stuff, revenue, inventory or stock item, as in the case, depending on what you use over there, then purchases. Okay, then save. That's good. I think we are done with inventory. So for now, we are done with inventory. So we'll look at creating tax. Now, if you look at this question, it says every item sold is subject to 7.5% VAT payable to the tax office. So that means that there's a clause there. We have to create another non-human data, VAT. So I'm done with this. I can exit here. So let me check my list before I exit to be sure that 3 of them are now in the system. So you click your list. Excellent. Excellent. So you can see that from the list now, you can see that I did not impute both the selling price and cost price of body lotion. So I can click on it. It brings me back. So body lotion is 4,000. Right? Did I get it? It's 2,000. Sorry, 2,500. The selling price is 2,500. While the cost price is 2,000. If from the case study is 2,000. Okay, so I can now go back and save. So once you omit something, you can always come back. That's the essence of clicking on list. That is the essence of clicking on list. Okay, you can always come back and do that. So let me check my list once again. So the prices are there. Perfect work. Excellent. So I can exit and now exit the inventory. So second process delivered. Okay, Mr. Main item. Let me call back one of the item. Now, this linking part is what determines your trading account or what determines your gross profit. So from the tags here, you can see that the software is even giving you a guide on what to link up there. You can see GL sales account. That means you link your sales, your income account has to be here. GL inventory account. It means that your inventory account, inventory or stock account has to be linked there. Then GL cost of sales. It simply means your purchases has to come in here. Okay, so the software is also guiding you on what you should put in there. So that's exactly what I've done, because when here by this side to show you that you have linked correctly. Okay, I hope thank you so much for that observation. So I can save one time and exit. Okay, so now the next thing is to create VAT, which is also a part of non-human data. So I'll go back to maintain. Remember, it is all about today. I'll go back to maintain and go down to the second to the last feature. Second to the last feature, that is sales taxes. So you click. Please follow me. I'm going to be very, very slow on this one. So we are creating our tax for the very first time. Okay. So it says set up a new sales tax. So you have next. Good. What is the value of the tax? 7.5. That's all. That's all you do. How many tax are these things being shared? How many tax office do I? One. So you click next. So you repeat the tax office name. So I'm going to use the word tax office. That's a sales tax agency ID. That is the body that collects the tax. So I'm going to use tax office. Okay. Like in Nigeria, I will say FIRS. Okay. Okay. So, but for the generality's sake, I'm going to use the two tax office. Okay, that's much you can take. So let me use FIRS then. FIRS. Okay. FIRS. So then this tax vendor, we are remitting tax to, we now have to create it as a vendor into the system. Okay, that's the third layer now. You have to create it as a vendor now into the system. If you remember, we did the same thing in QuickBooks. When we are creating our sales tax in QuickBooks, we came up, came in contact with something almost similar, So you drop down click on the drop down and select new. Okay, select new. So type FIRS. You can type it in full if you have, because of time. Yeah, it's Federal Inland Revenue. You are liberty to type it in full. Now, this vendor, they are in charge of receiving the VAT, right? So I'm going to link them to VAT account. See the linking now. I'm going to link them to VAT. Should be up. Yeah. What it simply means, anytime VAT is received, it will be remitted. The accumulation will be remitted to this vendor, FIRS. Then you can go ahead and put in address, phone number. The most important, the two key things are the name of the vendor and the account that is assigned to that vendor. Okay? So save, that's the only one we are doing for now. Save and close. So then you come here, you now come back here and pull it up. So sometimes it might not show, it takes some time, okay, to come up. So we can still leave it and come back later. So it might not show, so I can, you see, I'm now forcing it out. Sometimes it shows, sometimes it will. So what you do is to force it out. By the time you start typing, it will pull up the name. So good. Now, in Nigeria, we charge single tax rate. Our tax is single rate. That is 7.5 does not make it double digits. It's still single rate. Okay, so you leave it as single rate. Then retype the VAT amount. This VAT percentage amount 7.5. Then now link that VAT account. Link it back here. Please see what I have done. Follow this trajectory, and your VAT will be extracted perfectly. Follow this trajectory, this pattern, and your VAT will be extracted very well. Okay, Mr. Robert said, please do a brief rewind on the tax from beginning. Okay, fine. I don't have any problem with that. I can. Mr. Paul says, yes, so it's very, very clear. Okay, I'm not going to start afraid, but I'm going to move backwards. So this is where we started from, Mr. Robert. This is where we started from. Yes, Esther is saying, is there? Yeah, the video is always there at your beck and call. It's always on our YouTube page. You can always come back and have it as many times you want. So it's yours. The video is always there for the public. Okay, so the system automatically notices that this is for the very first time you are coming to create a sales tax or VAT. So you click next, then type in the tax value, that is 7.5. Always leave it as 1 because we are remitting to one tax agent. Then next, okay, the tax agent is FIRS. Here again, FIRS. Then register system by clicking new. If you click new, FIRS, then link that's FIRS. That is all. That is the key thing you have to do. Then you save. Then come over here and call it up. This is it. Okay. Then repeat the 7.5. Then finally link it back to that VAT. The first linking was for the FIRS. The second linking, which is this one now, is for the system. The one the system will now use to calculate the VAT and show you what the consumer is to pay. Okay, then next. So what name do I want the system to have? So I want the system to have the name VAT, value added tax, or sales tax. Okay, is that much you can type? So let's go with VAT. Value, you can type it in full. Value added tax. Okay, nothing more to do here. That's so. This is the final stage. Then you click finish. Now, if you finish, it will return you to where you started the journey from. I had, I don't want to mention her name. I had a very, very kind woman. I had a student. While this training was going on, it was a physical class. Why it was, and a very large class. Why it was going on. So she will create the tax. Once she clicks finish, it will say, Mr. Emma, how many times will an only for me to get there? She has done over 20 something different VAT. So once it brings you back to where you started from, please don't cancel, because the VAT is already in the system. That one is okay. It's okay for us. Okay, so the next thing on the line is now creating names of customers, names of and names of employees. I think that will be the where we'll end it for today, so that tomorrow we will just dive into posting, because we have watered the ground perfectly. The ground is so fertile that tomorrow will be a roller coaster for us, especially when network is also cooperating with us. I'm happy today that network has cooperated with us. For the QuickBooks classes, there some of them who have the experience will tell you what network has done to us. Please don't forget to subscribe to our page. We would like you to be part of us. Many more things are coming after our challenge. For some of you who have been longing for Sage 300, that will be coming on this platform. For a lot of you that will be longing for Sage 300, after our challenge, the next activity on this platform is Sage 300. Once we are done with Sage 300, we'll move into data analysis, business analysis, project management, and we come back to QuickBooks again. But remember, the way I do my classes is that every class has something new. So if you have had QuickBooks in the past, be rest assured that the next QuickBooks class that is coming will be more solid than the one you had earlier. So that everybody that knows me knows that my class is a dynamic class. New things continue to come up. It's not intentional, it's how my creativity runs. So that is it. Okay, so let's go to creating customer names. Please don't forget to subscribe. Like I told you, we want you to be part of us, and we want to be part of you. We want to be bringing this to your doorstep. Please like, comment, share, and make sure you're also part of our WhatsApp group, so that updates will only major updates are dropped there, so that members can access them quickly. Okay, to create a customer, we are still on maintain, we are still on setup. So this is an hour 16 minutes. We are still on setup. So you go to maintain and select customer/prospects. We are creating customers, customer/prospects. So good. So here we are. So the first name there is ABC Ventures. ABC. Okay, Esther, in as much as you run out of data, the video is always there on our YouTube page, so you don't need to worry about anything. ABC Ventures. Okay, you can copy and paste ABC Ventures. Please note that this particular customer ID can't go beyond 15 to 17 characters. Okay, so when you have that at the back of your mind. Now, the next thing is the number, these ones are more the phone number and the rest. Look at where I'm taking you to. Once you key in the customer name, the next thing is I'm going to do two key things. Please The most important thing is the customer name, which we have entered. This customer to the sales or revenue account, so that anytime I sell to this customer, it will hit the income account. Watch this. You click on sales info. Okay. Now go down to where you have GL, general ledger sales account. Okay. I'm sure you people remember this place, your charts, right? So what I'm telling the system is that anytime I sell to this customer, whether full payment, part payment, or on credit my income account and debit account receivable. That is the interpretation. Okay, please follow this. Yes, tomorrow's video, which is day 2, will be on this page. Even if you will not be available, you can always come back to view it. It will be on this page. So, Mr. Robert, you are covered. You are very well covered. Now, if you look at this case study, you notice that a particular customer is owing us 10,000. So, which is Lasisi, right? Good. Now, I'll click Save and New because that is all for that one. The next customer is Venn Retailers. So Venn Retailers. Venn Retailers. So copy and paste. Sorry. Good. Now follow the same. Normally it will appear in general, but I've just narrowed it to sales info. Follow the same information. Link the customer. Come to sales info. Come down to GLCS account. Link the customer to revenue. Then save and new. The next one is Peterson. Peterson in investment. Okay. So copy Peterson investment. Investment. Copy and paste. Okay, then do the same thing, link Peterson to revenue account, then save and new. Then you have Billy Body Care Limited. Billy Body Care Limited. Okay, so enter, say it's the same thing, link him to or her to revenue account. You can see how perfect this thing is. Well, you can say you have been using it for no. See, what I understand about ICT is that it's a game of repetition. I have followed many consultants, and the only thing I have seen that make them stand out is the creativity they bring to the job. Apart from that, is repetition of the same solution. So when you are coding, it's the same words, it's the same info. So ICT is a game of repetition, but you have to run that repetition creatively. You bring in the fun part of it, and it becomes part of you. So let's go. Lasisi and Sons. From our brought forward, you can see that Lasisi and Sons is owing 10,000. While that's the only carryover or brought forward we have in our opening balances. So I'm going to create enter Lasisi and Sons. Lasisi. So let's close. Let me look at see if we are starting afresh. Okay. So I'll go back to maintain. Mr. Alfred said my screen is faint. Okay. But I hope you are seeing, check from your YouTube, adjust the edit, the quality so that you can come up. Okay. Please, okay, let me ask the general class. Please, are you seeing the screen clearly? And is my voice very clear? Please, one or two texts can also, let me get a confirmation from one or two texts. Is the picture clear and the sound clear as well? Please, one or two texts so that we know that all of us are in one page. Okay, Mr. Adebayo is asking of discount allowed and discount received. Good observation. Please carry me along. I'll write it down right now and we will effect it tomorrow. So discount, I'm writing it down. Discount allowed, and discount received. So thank you for expanding our course outline, Mr. Mr. Adeba. You beg. You have expanded the course outline. Okay, please, are you seeing me very well? Is my screen clear? And is my voice clear? Okay, Mr. Robert says it's clear from his end. Mr. Adebayo said it's not clear. Mr. Samson says these things are similar to that of QuickBooks, where the accounting software of different companies. What you must know is that all the accounting companies you have, software companies you have, must tailor their software to accounting laws. Does not differ according to different accountants. It's the same law, so the software must definitely be the same. But I can tell you, there are technical things you can do in Sage. It's difficult to do in QuickBooks. And there are technical things you can do in QuickBooks, you find it difficult to do in Sage. It is now which drug cures my sickness. That's the answer to the one you are choosing. There are things there are issues of accounting or business that will come up. Sometimes I go to clients, they say, no, this software cannot do it. They can't do it. By the time they see me display it, they say, the software is as expansive as your creative mind. And Happiness says, my screen is not clear. Please. Okay, let me stop and reshare this screen again. Let me share the screen again. Okay. Now, how is it right now? Please, I don't know if you can read Jeremiah's text. I don't know if you can read Mr. Jeremiah's charts and get clarity on how to go about it. But I've reshared my screen. I hope it's better right now. Yeah, look, please, can somebody read what Mr. Jeremiah is sharing? Okay, let me copy it and put it back on the screen. Can somebody read what Mr. Jeremiah is sharing? So, okay, but can you see my screen right now? Okay. Can you see my screen right now so that I can run? Okay, thank you, Mr. Mohammed. Mr. Jaresh said it's network. I guess so, because today I have to spend money on 5G. I don't want the last disappointment to happen again. Okay, fine, let's go. I was talking about Lasisi. So you can see that Lasisi is owing the company 10,000. Lasisi is a customer. So from our opening balance, he has an owed debt of 10,000 naira. Now I'm going to show you. Yes, it's network problem. It's not actually from my own end. Everything here is standard and looking good. I think the picture issue is from the network. Okay, fine. So I think some of us have offered the solution to this. Okay, so you can see that Mr. Lasisi is owing 10,000. Okay, coming from last period. Okay, so what are we going to do now? We are going to create Lasisi as a customer into our database and capture that old balance. So follow me, go to maintain and select customer/prospects. customer plus prospect. Then we have Lasisi and Lasisi and Sons. I hope I got it. Good. Then copy and paste. Good. Now, the first thing I have to do is to link Lasisi to Mr. Kayode, I have seen your message. Even with this one we are doing, we can still apply discount allowed and discount received. So just leave the steering for me to drive. I've penciled down discount allowed and discount received. So we will effect both of them. Thank you, Mr. Kayode. Okay, so then the Lasisi's name is here. Then I will link him to the account that will capture his transactions with Capital Enterprise, which is the revenue account. Now, he is owing us 10,000 that is brought forward. Now, watch me. I will go to history. I'll click on history. Okay. Now, that means that this 10,000 possibly must be coming in from May. Okay. So he has been customer since, or let's say from 1st of June, he has been owing us. Okay, so if you know the invoice date, you can put it here. But if you don't know all these things, don't bother yourself. Just click on customer beginning balances. So I'm going to use whatever it pops up here, just click yes. So that invoice number, I can call it old debt. Okay, date, let's say May. Let me use May. Let me use 12/05/25. Please, sometimes when you follow the same thing I have done, you see that your 05 will come first before 12. It is coming from the control panel of your system. That means it is not set to reflect the date format of Nigeria. Sometimes when you type 12th of May 2025, May will come first. Just go back to your control panel and reset it. Okay, I will share the screen again. Let me just finish this. Now he's owing us 10,000. Okay, then we want it to be debited in account receivable. Okay, I can just notice that it is a network issue, but the network is fluctuating. That's just the issue. So watch what I'm doing. Please pay attention. Just this video, you will rewatch it. I'm sure when it will come up when we are done and it's on YouTube, you see that the video will be cleaner than what you are experiencing. Please let's not allow these things to distract us. The video is there and we're almost done. Okay. Oh, thank you. So you can see invoice number. I can't locate the old invoice of that old transaction, so I have to replace it with old debt. Then maybe possibly the date. Okay, last month. It can be any date last month. Then the amount he's owing. Okay. Then you link it to account receivable. So you can see the AR account. AR means account receivable. So you can see the AR account, which is account receivable. Now I'm going to show you the report. Let's save this. It says click save. Click save. So it has entered. Look at it here. It has registered. Then exit. Look at that money showing. You can see the money showing now. Now let's quickly look at his report from here. Reports and customer ledger. Then here is showing June, so I have to expand the date so that you can capture that. I'll go to options, and click all. I want everything about this customer to show, everything. Then you click all and click OK. You see the 10,000 there. it has shown. If you go to your balance sheet now, that 10,000 is under account receivable, under current assets. So you can see we are doing well. So we are done with customers. So what is now, we have 2 more left to end today's class: vendor and employees. So we are done with customers. So the next thing you have to do is to check the list to see that all customers, you click save, then check the list to see that every customer, about 5 of them are there. Excellent. So you can see even the 10,000 of Lasisi is showing. Okay, so you can see it there. You can see it there. So I can exit now. Then the next is vendor. For those who are not, I think it's a network issue. But everything, I have like 5 laptops surrounding me, so I'm also watching. That's why I'm turning my head to different. They are all working perfectly. All the 5 laptops are working perfectly. So check your network. I think that is what the problem is coming from. I have 5 laptops surrounding me, and all of them are on different internet, and they are all working very well. Okay, they are all reflecting exactly what I'm doing from the main system. So the next one is vendors. Now we go back to maintain and select vendors. So the first on the list is Vegas suppliers. I think I have it here. Vegas suppliers. So Vegas suppliers. So you copy, paste. So you can go ahead and do your address, vendor's address, phone number. Those things are not majorly my headache. The most basic thing is that you have entered the vendor's name. Okay, vendor's name. Then the accounts, please pay attention to this place again. This is where I have seen a lot of companies mess up their accounting, their accounts by this process. Now, in business, there are 2 types of vendors. We have expense-oriented vendors and trading vendors. Trading account vendors are vendors that supply the goods that you resell. While expense-oriented vendors are those vendors that provide those admin or managerial service that you need or require in running your day-to-day activities. Yeah, yesterday we started with the intro, and we did the setup, and we left one thing out of the setup, which I intentionally allowed it to be so that we can start from there today. Do we have any question? Do we have any question? Do we have any problem? I know most of us we now have this software on our systems, and I'm sure we have done 1 or 2 practice since yesterday. So share your experience with us. Can you share your experience with us so that if there are gray areas, we can take care of it before we dive into today's work? Today is the main thing. Today is the most important thing, because today is what makes us accountants. So today we are going to look at the accounting side of it, how we get our information, our transactions into the system in order to generate the kind of report that the management will find very reliable and very relevant in making their decision. So once again, I welcome all of us. Thank you for holding on yesterday. Unfortunately, towards the tail end, network happened on all of us. Well, it's a blessing in disguise. Okay, so if you can confirm once again, do we have gray areas for some of us that have installed it on their systems and have done one or two things, do we have gray areas that we can look at so that we can start? My target again is that by 12 o'clock or 12:30 we'll be done with today's work. So do we have gray areas? Okay, I think we can. Do we have any question? Any question coming from yesterday's? Yeah, good morning, Mr. Austin. Good morning, Mr. Peter, Mr. Bado. Good morning, Mr. Kayo. Hope you all have. Once we are done, there's going to be a challenge, like I told us yesterday. Any question, and it might look technical, it might look hard or coming from. Once you are able to solve that question on QuickBooks, okay, as well as solve it on Sage 50 and arrive at the same answer, then you are entitled to a free masterclass training on both of them. Okay, and our masterclass training is very broad. It's very broad. This software, sometimes when people condemn them, I laugh. No matter how you see them, they are very broad. There are a lot of one amazing thing you can do. So one of the things I do with this software, I use it to write financial cash flow for organizations. So you can imagine, I use it to write cash flow for organizations. So how many years you want, I can still go back to this software and give it to you. So once you're able to get that, if the winner of that challenge, okay, or the number of people that arrive at the same answer from that challenge will be entitled to free masterclass training. Okay, so that's for the challenge. Okay, Mr. James Ekon is saying Vegas suppliers, I didn't get the expense account. Okay, Vegas suppliers has to do with cost of sales, because you are buying items from them. So you will link him or Vegas to cost of sales. So I'm going to demonstrate it now before we start. So without much ado, please confirm, is my voice clear? And are you seeing my screen very well? Is my voice clear, so that we can start? In the next 30 seconds, I think we should be up and running. Is my voice clear enough? And video good. Okay, so in that case, I will start with Mr. James Ekon's question. He says, Vegas supply, I didn't get the expense account. So I'm going to share my screen right now so that we can run. Okay, so are you seeing my screen? Please confirm so that we can start. Are you seeing my screen? Please confirm with the word seeing. Confirm with the word seeing so that we can run. Are you seeing my screen? Confirm with the word seeing. Okay, seeing. Good, good. Thank you, Mind Shift. Thank you, Mr. Kayode. Okay, so I'm going to answer Mr. James' question, Mr. James Ekon question. Then we can continue from there. So when you are creating a vendor, like I explained yesterday, in business, typically, there are two types of vendor. There are service-oriented vendors and inventory-oriented vendors. So the vendors who supply you items you resell to make money, or the vendors who provide services. Example of a vendor that provides services for you is your mechanic. So that's why we have repairs and maintenance in accounting. So your mechanic is a vendor. The energy company is also a vendor. Okay, they provide energy services. Now, on the other hand, you now have vendors you buy items from, you buy materials from to resell, okay, or even to use for other things, for production. So those ones are item vendors. Now, when you are creating them, it is very key to you go to maintain, select vendors. So when you are creating them, it is very key that you have to put them, link them to the right source. Now, I'll pull out Vegas. I'm going to pull out Vegas suppliers so that he can see how now, like I said, the name is very important. Now, if you go to expense account and drop down, you notice that Vegas is linked to cost of sales, because from the question, we bought some items from him. I think the product we bought from him was hair cream. We bought hair cream from Vegas suppliers. So I have to link Vegas to cost of sales. So Mr. James, this is the answer to your question. So imagine that Mr. James is paying, we are paying rent to Mr. James. What I will do is to select rent, okay? I will link him to rent or electricity. But in this regard, Mr. James is supplying us materials. So I will link him to cost of sales. Now, once that is done, you save and exit. Good. So having answered that, now, if you look at our question yesterday, we missed out something in these beginning balances. We missed out something here, and that is inventory. We have an item brought forward of 3 hair cream. So from this question, you can see that we had an item brought forward of 3 hair cream. So while we were creating the items yesterday, I intentionally allowed it, omitted it. So we are going back to get it fixed. So how do I get that done? You go back to maintain. Remember, it's part of the setup. You go back to maintain and select inventory item. So these 3 items are more like beginning balance. They are just like beginning balance brought forward. So quantity of items brought forward to a new period. So you call back your item name, which is hair cream. Good, this is it. So this is the hair cream that we created yesterday, if you still remember. Now, what way I'm going to, you move your mouse to where you have beginning balances at the footer here. You can see it at the footer. You click. So look at all the items here. Then I'll select hair cream. Let me be sure, hair cream, correct. So what is the quantity being brought forward? 3. And the cost price is 2,000. So this will give us a balance sheet balance of 6,000 naira worth of hair cream. So this is it. Now, once I click OK, now notice what happens. Look at it. Quantity on hand. You can see it. Quantity on hand is registered, which is also the same thing as quantity available. Okay. So this is how you go about doing that. You click on beginning balance. It opens. Select the item in question, put the quantity you are bringing forward, put the unit price. If there is no unit price as at the time you are bringing it forward, you don't need to bother yourself. You just leave it as 0. The most important thing is that the quantity has been captured. So you click OK and look at it here. It's showing exactly what we have. Then you save and exit. So everything about setup has been completed, has been concluded. Now, the next phase of this work is to start posting transaction. And the first transaction to post is the beginning balance. Look at it here. These are balances brought forward. Okay? They are more like the internal transaction of the business. So it will pass through general journal. It's one of the functions of the general journal to capture beginning balance. Now, you can see where it differs from QuickBooks. The way QuickBooks makes it a lot more easier to capture your journal, a lot more easier. But Sage, you have to pass through the journal. You have to pass it through the journal. In QuickBooks, you might not even use the journal, but in Sage, it is a journal operations. and you must pass through the journal. So you can see these are our beginning balance. So let's get that going. Let's roll it in. Now, when it comes to day-to-day accounting work, when it comes to posting of business transactions on day-to-day, on minute by minute, on hour by hour, you go to tax. That is the work of tax. When it comes to setting up the software, it is maintained. When it comes to posting your everyday transaction, it is tax. That is the work of tax. That's why we post day-to-day accounting operations, including the journal. So you can see it here. Invoice is here, invoicing the customer, receiving invoice from the vendor, journal, bank record. You can see a whole lot of them, voiding of checks. So the first thing we are kicking off with here is the journal. Because why are we using the journal? Because we have a beginning balance. We have balances that were brought forward for us. So we are not going straight into the everyday transaction. We have to take care of the brought forwards first before we start the work, so that our account will have that balance. Okay, so you click on general journal entry. Okay, so this will also test your knowledge of double entry. Double entry, your knowledge of double entry is needed here. So the date is automatically there. So I'll reference my journal. Journal, let me just call it capital letter journal /0001. So that's the reference I want to give it. Now, if you look at your journal, you see that it is in some ledgers are in debit, some are in credit, but the important is that there is a balance. There's the accounting ratio is showing that there is a balance. So what it means that the first information there is that we brought a cash at hand balance. That is, we have a cash at hand of 90,000. So look where you have GL account, you click. If you drop down, you will notice that you can easily see the chart of account we created yesterday. Okay, now the first thing there is the cash at hand. Then my narration. Don't forget our normal useless accounting English, being beginning balance brought forward. Don't mind me, I said useless, because any textbook you open is still the same narration. So I'm going to type this. Very important. We are storytellers. Beginning balance beginning balance for the period. Okay, so here we have it. Narration is very important in accounting. It's very, very important. Then cash at hand is an asset, is a debit balance. You can see that from here is a debit balance, and also is an asset. And anytime an asset progresses in value, it attracts debit. Okay, so 90,000. So I'm going to debit the assets first, then I'll go to the capital and liability. So the next one is spiritual bank. In the spiritual bank, we have 280,000. So you can see that the narration is repeating itself automatically. I don't need to type it again. So in the spiritual bank, we have 280,000. Okay. Then inventory, we have an inventory balance of 6,000. So I'll select inventory, 6,000. Then the next one is account receivable. Account receivable should be down. You scroll down. This is it here. The amount you are owing your customer. So account receivable is 10,000. Then followed by, I think that is that for the assets on the asset side. Okay, so it's giving us a balance of 380,000. So let's go to the we have an account payable of 12,000 being owed to Vegas, which we have keyed in yesterday. So account payable on the credit side is a credit balance, it's a liability against us, so of 12,000. Then we have equity capital. Where is it? Equity of how much? 364,000. Okay. I think I have to make this amount. I have to make equity 374 so that it can balance. Maybe it's typographical error. So 374. Good. Now notice this. Please correct your equity to 374. 374,000. Yes, so that we have that balance. So look at it. The equity is 374,000. Please correct it in your case study. So you can see that there is a balance here. Both the asset, our accounting equation is balanced. Assets equal to capital and equity, or debit equal to credit. So everything that will be coming in has to be perfect. It has to be perfect. So everything is perfect here. I don't have much time to waste here again. The debit, all the debit items are on the debit, and all the credit items are on the credit. Now, anytime you finish and you are seeing that out of balance here is having a figure, even no matter the amount of value that is here, is simply telling you that both the debit and the credit has not balanced. So you need to do something to balance them. Once they balance, out of balance will be zero. Okay, so let's go. I'm saving it. Let's even look at our report with what I have done so far. Let's go to the balance sheet. I'm done with the journal. Let's just take a look at our report. Let's look at the balance sheet. This is financial statement. Here we have balance sheet. You can see. Did you notice that instantly everything on that journal is now showing on our balance sheet, because they are all balance sheet items? Okay, most times in accounting, most of the brought forwards are beginning balances are majorly balance sheet items. You can see instant. You see what the software is now doing is work, because it's now giving me real-time report. You can see that the setup is human, the posting is human. I've just posted on the journal. Then the real-time reporting is the software. So you can see that my balance sheet instantly is up and running. Okay, we will not come back here again until we are done with the posting. Okay, good. Okay, so now let's dive into the transactions proper. Okay, good. Now the first information there says a purchase order was sent to Vegas suppliers. Yes, for the supply of 20 hair cream. It's more like we raised Capital Enterprise, raised a requisition order. Okay, we raised the requisition order. Okay, sent it to Vegas suppliers, mandating them to, get us a supply of 20 hair cream. Right? Good. So how do we get that done? Remember, it is a non-commercial document. It does not attract being posted to any books of account, but for documentary evidence, it is. So we call it the initiators of transaction. I can send a requisition order, and maybe possibly the supplier might not even like the condition I'm giving him. He can decline the service. Okay, so you can now see why we call it initiators. They initiate transactions, but they don't end transactions. So that's why they are non-commercial documents. Good. So let's effect that. A purchase order. You go to tax. Remember, we are dealing with a supplier. So you go to purchase order under. So you can see that there's a demarcation here. From this demarcation upwards, it deals with customers, while from here downwards, you are dealing with vendors. So there's a purchase order there. Okay, this is it. So we bring in Mr. Vegas name. Vegas suppliers. Good. So everything will be on today's date. I don't need to bother. So purchase order number 1. Okay, so what are we demanding from him? 20 hair cream. Quantity is 20. The item is hair creams. Okay, good. Now it is left for Mr. Vegas to add his tax, his VAT, and everything to us. Our work, our duty is to pay. Okay, so this is up and running. I will save. You click save. Good. That question is taken care of. Now, the next question says, Capital Enterprise finally bought 12 hair creams on credit from Vegas suppliers at 2,000 naira each. Please note this. We sent a requisition order for 20 hair cream and we ended up buying 12. We ended up buying 12, right? Yeah, it's normal in business. Maybe because of the price was very high, so we decided to go lesser. Okay, so what happens now is that, remember, the bottom line is that we are buying on credit. So that means that Vegas suppliers will come to us with his invoice showing that we are now liable to him to the amount of the 12 hair creams. So you click on tax, click on tax, click on tax, and we click on tax and select purchases/receive inventory. Anytime you purchase goods or services on credit, anytime you purchase goods or services on credit, this is where, that means that the vendor who has sold those goods or rendered such service is coming with his invoice, okay, that he will submit to you, which shows that you are now liable to him to the amount on that invoice. So this is where you select purchases/receive inventory. Good. So I'll pull down his name, Vegas Suppliers. Now notice something. Immediately I selected Vegas Suppliers, the whole rows and columns are locked. The system is telling us that this transaction might be coming from an earlier issued purchase order. We have issued him a purchase order. So it's like he will now, the system will transit this transaction from the purchase order. Okay, so I'm going to put this is the first invoice we are receiving from a vendor. Now it says apply to purchase order. You can see, because we have already issued him a purchase order, the system has noticed that there's an outstanding purchase order. So is this transaction is it transiting from the purchase order? If it is not, if we are dealing directly or differently from him, then you go to apply to purchases. That means that apply to purchase means there was no purchase order issued. It's just invoice he is giving us. But now that we have a purchase order, it means that there is a procedure behind this transaction. So we select that purchase order number. You can see we ordered for 20. We ordered for 20, but we finally settled for how much? 12. What will go to your books of account is 12, not 20, because it is that 12 that you are liable to. 20 is just a documentary evidence, and we ended up with 12. Okay, so that is it, giving us a total value of 24,000. I think we are good to go. Good. That has gone in. Now this third question says, bought 20 red shoes on credit. We are buying them on credit from Viva Importers. Now this credit has no purchase order behind it. It's a direct invoice purchases. Okay, it was issued earlier. Okay, so it's a direct invoice purchases, and we are buying 20 red shoes on credit from Viva Importers at 1,500 naira each. And select the same place. It is invoice-based transaction, so we are owing the supplier. So we go back to purchases/receive inventory. Call up the name of Viva Importers. So this will be the second invoice we are receiving from our suppliers. So quantity here is 20 red shoes, 20. The item we are buying is red. Did you see how this thing is moving smoothly in my hand? You know why? the setup was top notch. So the transaction is benefiting from yesterday's thorough setup. You can see how the whole thing is flowing. But just in case, yesterday we set up ratios at 1.5. Just in case Mr. Ratios or Mr. Viva might now increase the price to 2,000. It's a simple thing. Just click on this price and you edit it and it flies. So we are done with that transaction. We save. Then again, we bought the last purchases we are making. Says bought 20 body lotions from link manufacturers and paid check for 15. Part payment purchases. Okay, so the total quantity bought was 20, but we are making part payment for 15. It happens in business. Like I normally I'll tell my students, there are 3 things that happen in business. It's either you purchase on credit, or you purchase on part payment basis where you pay part of the transaction, or it is full payment purchases. The same thing applies to your customers. Okay, now how do I go about this? You go back to tax. Now let's assume that this vendor is paying in full. We are paying this vendor in full. Let's assume we are paying link manufacturers in full. You select what? Payment. So anything that has to do with full payment purchases, you click on payment. Okay, this dialog box will pop up to ask you, are you paying him by cash or by bank? Anyone you select, your payment window will open. It's a simple direct thing. Just select the name, the check number, the bank is already there, the quantity and everything. You save, finish. This simply means you are not owing anybody anything. It is between your purchases and your cash account or bank account. Okay, for this last question of part payment purchase, you go back to tax and select purchases/receive inventory. Call up link manufacturers, they are here. So the third invoice. Now the question says we ordered for 20, right? So I will acknowledge that 20 body lotions. This is it. That 20 body lotion is worth 40,000. And the question says at the point of purchase we are paying for 15. At the point of purchase we are paying for 15. Now follow me. Watch where my mouse is going. Look at this place where it says amount paid at purchases. Okay, so 15 at 2,000 naira will give us 30,000. Did you see? The system will open more rows. Look at it here. So it was paid by check. That 15 was paid by check, right? So this is the check number. Okay, it was paid by check. So the payment method is already showing check. Then you have the cash account was through spiritual bank. That is our bank. Anything check means that it has passed through the bank. Now the total value of the transaction is 40,000. We part paid 30. Now what we are now owing link manufacturers is 10,000. Just this is it. Okay, which happens every day. Most of us have experienced this type of transaction. You part pay at the point of purchase. Okay, so I'm going to save this. Excellent. So we are done with making purchases. So what is left now is to start selling some of these products. Please confirm once again to me that we are still on the same page. Is my voice clear? Are you seeing my shared Sage 50? Please do confirm so that let me be sure that all of us are on the same page. Please confirm if you are seeing my screen and my voice is clear. Okay, thank you, Mr. Bala. Thank you, Mr. Kano. Thank you, Mr. Kayode. So if you are joining us for the very first time, I want to use this few minutes to welcome you. Okay, thank you for being with us. Yesterday's class is already on the YouTube channel there. You can take your time to go through it again. The video on how to install your software is there. The video on how to create a new company file is there. So if you're coming in for the first time, thank you so much for being there for us. Thank you for giving us the opportunity to do this, because without your presence, my presence will be somewhere else. So thank you for that. Please don't fail to subscribe to our page. Don't fail to comment. Don't fail to ask us questions that will even make us generate more video that will be valuable to you. Don't fail to like and share. Thank you for being part of us, and let's zoom in again. Okay, now we are done with buying from vendors. Our store, our warehouse is full of items right now, different types of them. Now it's about time to sell. Okay, now the first on the transaction there is receive a sales order. Now customers can also give you an order, mandate you, okay, to prepare an order for them, okay, so that they will look at it, agree on the price, then order you to, come transact with them. So receive a sales order from ABC Ventures. ABC Ventures is a customer, so they have mandated us to raise a sales order for them. Okay, so we are going to do that. We go back to tax, which is where you take care of your day-to-day accounting activities. You go back to tax. Now, this segment is all about your customers, okay? So you go back to tax and select, okay, sales order. Remember, it's also a non-commercial document. Now, if a customer mandates us and we send the sales order to him, the customer can decline the transaction. That means that the transaction ends there. Some of us who order food online, you can order food. They will send you the order, okay, send you a soft copy, and the price does not go down well with you. You can decline the order, okay. One of us is complaining about network issue. Do we have network problem? Any network challenge there? From my own end here, all is well. Okay, good. Do we have any network challenge? My process here is up and running. Okay, so now how do we capture the sales order of ABC Ventures? You go to sales order, drop down. So where you have quote, sales order and proposal, they are all the same. Okay, you select sales order. Okay, this is it. Remember, it is a non-commercial document. We may not agree on price. I can decline the transaction, so no books of account will be opened. So ABC Ventures, so sales order number, very key. Please follow my guide, follow my lead. You can see I'm very meticulous with number. It's like when you purchase a product and on the receipt or invoice slip there is no number, then it's fraudulent in nature. That is a problem. You have to collect a receipt or invoice that has number. So I'm very meticulous with adding number. So what does ABC want us to order? 15 hair cream. Okay, so item is hair cream. You can see totaling 60,000. Okay, so this is settled. That means that there is a document, there's an evidence that ABC Ventures has requested a sales order, okay, to know what our service will look like. Okay, if the price is good, you can go ahead and say, okay, invoice us. So this is more like a documentary evidence. Okay, that or an initiator. Just click yes, or just an initiator. So this has gone in. Now the second question on the part of selling, it says sold Capital Enterprise sold 12 red shoes for cash to Venn retailers. We are selling 12 red shoes for cash to Venn retailers. So go back to now. The question says for cash. For cash. This simply means that Venn retailers are paying in full. They sold, whether it is for cash or by check, it is in full. The question says sold 12 red shoes for cash. That means that Venn retailers is paying us in full. What do? You go back to tax and go to receive money. Receive money. Or if what you have there is receipt, is correct, you go back to receive money. Tax, receive money. Good. Now, this dialog box wants to know the medium of payment. Was it paid by cash or by bank? So it's by cash. The question says for cash, so I'll leave it and click OK. Good. So here we are. Select Venn retailers. So reference, this is the first receipt number. Yes, the date is already there. So quantity is 12. Item is red shoes. So automatically this is it. Now this is where the game changes, right? Let me push this to one side. Now the question says every item sold is subject to 7.5% VAT. Now I'll now enter my VAT. Let me push this to a corner. Good. You click. Now look at yesterday's VAT. Did you see what the system has done? The VAT of 7.5 of 48,000 is 36. Now the new amount, the total amount, okay, is now 51,600. 48,000 belongs to us, while 3,600 goes to the government. When you add the two, it gives 51,600 naira. So that is it. I've added the VAT to this, then I'll click save. Good. Next transaction, Capital Enterprise is selling 10 hair creams on credit to ABC Ventures. Capital Enterprise is selling 10 hair creams on credit to ABC Ventures. Remember, ABC has ordered 15. He has requested a sales order of 15 hair creams, but he's only buying 10. So the 10 is what is going into our books of account. So I'll close this, go back to tax, and select sales/invoicing, because he's buying on credit. He's not paying us. ABC is buying on credit. So I'll select sales/invoicing. Okay. So let's go. So pull out ABC's number and name. ABC. Now you can see that the rows and columns are blocked again. Why? The system has dictated that there is an earlier issued sales order. So it's most likely that this transaction will be coming from that sales order. So in a situation where we don't want to use the sales order, we want to discard it, let it remain in the system as mere document, you just click on the second folder tab using apply to sales. That means that you just go in direct and enter the invoice. But we are running with the sales order. So this is the first invoice we are having today. So you drop down. Did you see it open? So the order was for 15, but he's only going to pay. We are going to invoice him for only 10. Okay. Then add your VAT. Don't forget that. This is your VAT mirror. You click. So you can see the total amount now is 43,000. Okay, 40,000 will come to us, 3,000 goes to the government. So 43,000 is what Mr. ABC Ventures will pay for the 10 hair creams he has just bought. Good. Okay, please, I want some of, okay, this will be, now, let me just put this, Some of us, by the time you start posting, you will realize that this column, this GL account, will not be there for you, okay? You can see that my own is here because I have gone to open it, okay? Mr. Adebayo, thank you for joining us. You are not late, sir. You are still on track. The video is always at your service. Now, watch this place. My mouse is moving to and fro. Most times you notice that it will not open for you, okay? Now, this is what you do to have it open. So let me save this. Save. Yeah, yes. Now, this is what you do. In a situation where you are not seeing your GL account, because the goal of the GL account, it helps you to see the account or the ledger where that money is being posted to, okay? Now, what you do is this. You go to options, okay? You go to options menu, click on options, click on global, okay? If you open global, you see that your own, these two places, here will be checked like this. This is how it will look like when you open your own. So what you do is to uncheck it, remove it, make it to be unchecked like this. Okay, once you finish that, you click OK. Anytime you open any of your sales purchases document, you notice that the GL account will be there. That's how it will come out. Thank you once again. So let's continue our transaction. Okay, now Capital Enterprise is selling 5 red shoes to Peterson Investment on trust. On trust is the same thing as on credit. Okay, so the Capital Investment is selling 5 red shoes to Peterson Investment on trust, which is the same thing as on credit. So that means that we are going to invoice them, showing that they are liable to us, to the amount on that invoice. So we go to tax and select sales/invoicing once again. Sales/invoicing. Okay. So call up Peterson Investment name. This is it. So this should be the second invoice we are issuing. Then quantity 5. Items in question is red shoes. Okay. Then we'll apply VAT. This is your VAT. Once you click, the system works out. You can see the 7.5% of 20,000 is 1,500, giving us a total of 21,500. Okay, so we are good to go to save. So you can see my GL account is now open. So I can now look at where the system is, how the system is doing the debit and credit. You can see my income will be credited. Okay, my income account will be credited, right? Then while accounts receivable will be debited. You can see the double entry there just on the screen. Okay, so once you set up properly, the system takes over your double entry. Your duty is to garbage in perfectly. The system takes over every accounting fundamentals will be controlled by the system. Most importantly, your double entry, your debit and credit is no longer, it's out of your hands. It is now in control by the system because you have set up properly. You have used the setup to make the system align with the proper accounting posting. Okay, so I will say, yeah, good. So the next one is basically the last one there. Sold 2 body lotions to Billy Body Care Limited at 2005 by cash. It means that Billy Body Care is paying in full. Let me go again. Sold 2 body lotions to Billy Body Care Limited at 2005 by cash. It means that Billy Body Care Limited is paying us in full. So how do we take care of this? You go back to tax and select receive money. receive money, because we are receiving money in full from Billy Body Care Limited. So let's go. So this is Billy Body Care. Okay, the second one. Then, so you can see our cash is already there for us. But in a scenario where it is bank, you can drop down from here and select spiritual bank if you are paying him by check. So quantity is 2. Item being sold is body lotion. Okay, so you don't need to bother. Look at your double entry. Okay, cash is credited because he's paying us. Our cash account, our cash is increasing. Okay, while income is credited, cash is debited, income is credited. So both income and cash are increasing. Our income has increased by 5,000 and our cash has also increased by 5,000. So what I will do now is to apply VAT. Apply VAT. This is it. So the total amount will now be 5,375. 5,375. And boom, it goes in. It goes in. So we are making progress. So you can see, once your setup is good, the posting flows. It flows in your hand. Now, there's something I want to tell us too. Anytime you are transacting with your customers, there are 3 things that happen. It's either, now the 3 things are these. You can sell on credit to your customer. The customer at the point of buying can make part payment. That means part payment sales. Then you can sell, you can make full payment sales to that customer. So we have looked at 2 now, credit sales and full payment sales. Let me just quickly, I might not save it, show us how a part payment sales looks like. I'm going to use one of the, let's use Lassisi. Okay, the Lassisi is owing us. Let's use a different person. Let's use a Venn retailers. Okay, now Venn retailers is buying, let's say 10 is buying 10 body lotions. Okay, added VAT to it, and out of this total amount of 26,875, Mr. Kano, please, the case study is on our WhatsApp group. I think I posted it like twice on our WhatsApp group yesterday. So if you can scroll down, you will see the case study of this capital enterprise. It's on our WhatsApp group, Mr. Kano Anyim. Yes. Okay, so let's assume now we have a total sales, credit sales of 26,875, and Venn retailers is willing to pay 20,000 right now. Okay, now see what you do. You come down here. Okay, let me close this and use the right window. So you go to tax, select purchases / receive inventory, Venn retailers. Okay, maybe the 4th invoice. So he wants 10 body lotions. Okay, then you apply VAT. Good. Now his total value of the 10 body lotions is 26,875, but he has 20,000 right now. He wants to make a part payment of 20,000, right? Good. Now what do I do? Look at this place. Look at this. It changes to red. It's a hyperlink. It says amount paid at sales. That is amount paid at the point of sales, right? You click. Okay, please avoid here because it's going to give you problem when you want to do bank reconciliation. So reference, I'll say PP, part payment, and he's part paying 20,000. Okay, and that 20,000 can be by cash, it can be by check. It doesn't really matter the medium of payment. Okay, so you click OK. Look at how the system works it out. The total value of the transaction is 26,875. Now he's making a part payment of 20,000. Okay, Now he has a balance of 6,875. So I can suppose this, at least we have both vendor and customers, we have used the 3 layers of transaction for them. So I can save this. Let's go. Yes. Good. Now, we are done with selling to customers, and we are also done with buying from vendors. So the next question there says, capital investment or capital enterprise returned 2 defective hair creams to Vegas suppliers. It happens in business. We normally call it return outwards. When we purchase goods from our vendors and we now realize that some of them are not up to our standard or defective, your duty is to return it to your vendors, right? To return it back to them. So we just noticed that out of the 2 hair creams we bought from Vegas suppliers are bad, so we are returning them. So what do? We go back to tax, okay, and select credit memo. Okay, that's an American English, right? In our local accounting palace, we say return outwards. Okay. So what it simply means that I'm now crediting myself for giving back. So capital enterprise is crediting themselves for giving back the unwanted products to this manufacturer. So the accounting equation is that when I have been owing him, which is a debit balance, now that I'm crediting myself, it will reduce the amount I'm to pay him. So I will go to credit memo, click on credit memo. So call up the name of sorry, I think we go to tax. Sorry, this is actually here vendor credit memo, because we are returning it back to our vendors. Sorry for that oversight. It's actually, so this is return outwards because we are returning it back to our vendor. So that's why it carried the name vendor credit memo. Okay, so sorry for that mix up. So it's actually vendor credit memo because we are returning the defective goods back to our vendor. So I'll click, then call up the name of Vegas. Yes, where is Vegas? Yeah, this is Vegas here. So I can call it credit memo number. Let me just call it return outward 1, right? Then the system wants to know which invoice will it be applied to. You can see how meticulous these things are. Which invoice are we applying this return outward to? So it was that first invoice given to Vegas, right? We can give him any invoice. All the invoice numbers will drop. Then we'll select the one to apply this. So how many out of the 12 products we purchased from him, 2 are bad, so we are returning the 2. It means that what we will now pay for will be the remaining 10. Okay, good. Okay, so remember, so this is it. This is it. Okay, then now this is where it looks a bit manual in nature, but we still have to take care of that. So what we are returning is VAT inclusive. So we have to figure out 7.5% of 4,000, because if you are returning the defective goods, it means that the VAT you have that was earlier calculated on them, okay, is null and void. Please note that when you are returning the defective good, that means that the VAT on those 2 items becomes null and void. So we have to find out the tax value of 7.5 on 4,000. So I'm just using a random number. Let's say it's 200. Okay, so what I'm returning to him will now be 4,200. Okay, then you say it means that the money I'm owing Vegas suppliers will reduce by 4,200. Why? Because I have returned 2 out of the 12 products I bought from him. I'm now liable to only 10. Good. Now, the same thing can also happen when our customers, noticing that our supplies, some of them were not good, will also return back those products, okay, that are not okay. Okay, Mr. Abola is saying I should repeat the part payment transaction. Is it for vendor or customer? So, Mr. Abola, just be specific. Is it the part payment on the side of the vendor or on the side of the customer, so that I can have a clear direction? Okay, now in a scenario where our customers wants to return maybe defective good, it might not only be as a result of defective good, it can also come as a result of oversupply. We can oversupply, but it can also be as a result of unwanted supply. Okay, in the course of supplying them, we now added other product that they don't need. Okay, now in that regard, it becomes return inwards because our customers are returning it back to us. It becomes return inwards. So what do? You go back to the same tax and select credit memo. So in this regard, we are now crediting our customers against us. The implication is it will reduce what the customer is owing us. Okay, so let's go. So the person in this regard is Billy Body Care Limited. So you select Billy Body Care Limited. Yep, here is it. So this is the first return inward. So return inward 1. So this is it. So this is it. I can now go back. He's returning 2 of these items, right? That's what is he returning? Body lotion. Yes. Yeah. For wrong supply. That means we gave them wrong supply. Then the tax in it as well will be taken out. Okay. So this is so you add VAT to it. 0. Okay, so add VAT to it because all of them will be non and void. So since he's returning, he bought 2 and he's returning it back, it then means that even the VAT will also be non and void. So I'll click save. Okay, now this is where we are. Paid the following. Okay, you know, if things do not happen in business like this. In business, it's in random nature. Sales can come at any time, purchases can come at any time. You know, all of this can happen simultaneously and they are controlled. But just for the case of the case study. Now it says paid the following. We are paying Vegas suppliers by check. We are paying Vegas suppliers by check. Okay. So remember, we are owing Vegas, so we are paying him by check. So go back to tax and select payment. We go back to tax and select payment. So call up Vegas. You can see what we are owing Vegas. The 12,000 beginning balance, the 12,000 from the beginning balance plus the new transaction. Okay. Now look at how this thing works. So I will label how we are paying him by check. So I'll put the check number. Select, make sure that you select the right bank or the actual bank where this transaction will be. This is to us to see the balance, what we have as balance in the bank. Now, a shrewd businessman, look at this. Now, I know a lot of us will just go straight and register 17,000 here. Just put in 17,000. But we forgot that we are already owing Mr. Vegas from the inception of the business 12,000. So what do? We have to take care of this 12,000 first. We have to net it off. Then the remaining 5,000 will now go to the current debt. So that means that the old debt of 12,000 is out. Okay, Mr. Abola, I can feel you now, so I will take care of that. So repeat part payment BP on customer. So I've noted it down, Mr. Abola. I will do that. Okay, now you can see how this 17,000 was entered. The 12,000 naira old debt has been cancelled, while the 5,000 has gone to reduce the current transaction. Okay, then you now make your narration being old debt paid in full. Then you might, please, I may not have all the time to be doing narration, so but in real time, for audit purposes, for integrity purpose, when you will be called to come and explain, please always make narration to whatever you are doing. So I'll say. Then the next one is Viva Importers. We are also paying Viva Importers by check. I think virtually everybody is being paid by check. So I'll go back to tax and select payment. Then call up Viva. You can see what we are owing Viva, 30,000, also by check. So bank, the check number, spiritual bank. Let's see what we have left. Our money has reduced from 250 to 233 now. Then what are we paying Viva? 20,000 of the. If you are paying Viva in full, you just click pay. You see it. And we are making further part payment. So this is it. Then save. Then link manufacturers. Okay, please, it's showing by check, right? But I'm going to make it cash. Please, pardon me, let me make it cash. Okay, so you save this is taken care of. Go back to tax and select payment once again. Who are we paying? Link manufacturers. In this regard, we are paying him by cash. So let's say the cash approval slip, let's say the number is 45. Then under cash account, we'll now change it to cash at hand. Okay, then we are paying him in full. We are owing him 10,000, and the same 10,000 is what we are paying him. So I'll click pay. Then don't forget your narration. You make your narration. Okay, Mr. Adeboye says, if the customer presents teller to you, yeah, the teller is your source document. Please, let's not forget this. The source document is always what gives us the authority to open our books of account. Once there's a source document, when you go to the bank, when you give them teller, that's a source document. They will start effecting on your account immediately. So the source document is that document that serves as an evidence to a transaction. So your teller is more like a source document, Mr. Adebayo. You understand? So the information on that teller goes straight into the system because it contains date, which is the periodicity. It contains the amount, which is the money measurement. It contains the business name, which is the business entity. It contains costs. You understand? So it contains a lot of things, and these are the things that warrants us to open the book of account. So the information on the teller comes into your software. That's for Mr. Adebayo. Okay, so let's move. Save once again. So I'm done paying vendors. So I want to now, I'm turning to the second page. So it's my turn to receive money from my customers. So it's now my turn to receive money from my customer. So Mr. Adebayo is asking a book. He said, nowadays, most companies prefer you pay first and present it to the sales department before it moves to the account. It still serves as it's still a source document. Yes, it's still a source document. It's just the paperwork to show that this is the level of transaction we've had with this customer, because that would now determine how you record it on the software. Please note this. The paperwork, the source documents, invoice is a source document. The receipt is a source document. They determine, okay, how the type of transaction, the level of transaction we've had with the customer, and now they also determine the part of the software we go to record all of this. Yeah, okay. Because if a customer pays first, he has paid in full. The important is that, did he pay in full? Yes, if he has paid in full, it's a receipt business. He has paid in full, you issue him receipt. The issue of going to the store to collect the goods is another different paperwork. It's just for the organization to know that the actual amount of goods was moved out, so that there won't be any room for corruption. But to you, the accountant, all you need to understand that, has he paid before he received this product? Has he paid in full? Yes, he has paid in full. When he pays in full, it now shows that in the software you are going to receive money. So that it means that the customer is no longer owing us. What happens in the store is a different ball game. It's also your work as an accountant. An accountant, it's also your social responsibility functions to know that the quantity that shows on that teller is actually what is being moved. That's why you can see in an accounting firm or in a company, you notice that the accountant is receiving the accurate amount of money being paid by the customers, but the product in the warehouse are suffering. But the money is accurate. The amount of money paid so far is accurate, but it's not reflecting in the product, because sometimes the storekeepers or store managers, they move beyond what was paid for, so that they will go to the back and do their normal business. I don't want to talk about this. I've seen enough. So let's start receiving money from our customers. Okay. So ABC Ventures paid by check 27,000. So go back to tax, then go to receive money. Okay. So call up ABC Ventures. Where is it? Okay. Where is it? And the question said he paid by check. So the check number, possibly the receipt number that was given to him from the office. Then the money is going to spiritual bank because it has to do with check. Then don't forget your narration. Because of time, I will not be doing this narration. And he's not paying us in full. He's owing us 43,000. Then he's making a part payment of 27,000. Yeah, this is it. So that means he's still owing us. He's having some outstandings left. Then you say, good. Then the next question there is Peterson. Peterson is also paying us by check. What 20,000 naira. So you go back to that. We are receiving money from our customers. Click on receive money. Okay. So you have Peterson. You are receiving money by check from Peterson. The check number, possibly the receipt. Then out of the 21,000 Peterson is owing us, Peterson is paying for. If he's paying in full, you don't need to type anything. If he's paying in full, all you need to just click on this box, pay. You can see it. But he's not paying in full. That is 20,000. Okay, Happiness Habib just wrote, how do we record a transaction that is paid with a teller? It's just what we are doing now. It's just to confirm that this teller is a reflection of full payment from the customer. You have to understand the condition of that teller. Okay? No, most times in business, I have also seen a company use teller as invoice. Please, the first thing you have to understand, what is the condition of this teller as a source document? If the teller is a reflection of full payment, then you go to receive money, you go to tax and select receive money. That's how straightforward it is. Because in business, you must understand the condition of payment. That is our work as an accountant. Our work is not to rush to the books and start updating. No. First of all, understand how the business was contracted. Once you're able to understand how the business was contracted, then you now know how the posting method will look like. Okay, Mr. Debayo, okay. Now, you might not post it immediately until the payment is confirmed. That's why we are still on the same page. Understand the condition. If your business policy says you will post when payment is confirmed, that means that the receipt you have just received must wait until we get a confirmation of the payment that we have received the money. Many businesses run it this way. In as much as they have issued you receipt, they will not allow you access to the goods until they receive payment. You can see it now. Until they receive confirmation of payment. I'm having my source document in my hand. This receipt, the invoice is in my hand. Okay, but we will not allow you to move with the goods. We will not deliver the goods to you until a confirmation of that information in the source document. Yes, it can happen that way based on company's policy. Then Mr. Lawrence is saying, what is the role of an internal auditor in all of this? It's to scrutinize and investigate. Yes. Please note this. It's a good question, Mr. Lawrence. Thank you for that question. So sometimes I have seen most auditors become very emotional with this audit work. And I have also seen auditors in their level of intelligence, illiterates who didn't even go to school are busy, stealing goods in even taking out money. They couldn't even discover how it's done. The first education an auditor must have, whether internal or external, is to educate yourself on how that business runs. If you are an internal auditor to a restaurant, understand how a restaurant business runs. If you're an internal auditor to a consulting business, understand what your principal is doing first, because that will help you to know how to go about your audit work. Not audit work on paper, not audit work based on appearance. It's audit work based on intellectual, your intelligence. Audit work based on your intelligence. You understand? So this is it. Once you are an auditor, understand the activities of the accounts department, understand how that business runs, understand what is going on in the accounting department. Please take the company policy, read it, read the job description of the accounts department, then you know exactly where to come in. Not when a transaction is still going on. You are asking them, please give me invoice, let me check, let me check. You are following everybody step by. No, you are creating enemies. You have to be very intelligent. Okay? Or redraft the accounting policy immediately the transaction is done. Let them push everything to your office for approval before they post into this accounting software. Let them bring all the papers to your office for scrutiny and approval before they will post. There are different ways to do audit work intelligently. I've seen them do funny things, and at the end of the day, guys are still having their field day doing what they were doing in that business. Okay, because the more you come up with, the more you open yourself up, the more these guys are also thinking faster than you. So that's why at the end of the day, things are still missing. Okay, so Mr. Peters is paying 20,000, which is part payment. You save. So this is it. It's a warning that the receipt number is not there. It has been used before, no wahala. So you can go in. Okay. Good. And let me add this quickly. Sometimes the paper rule of an internal auditor differs from the one the company policy will create. But, there is educational internal auditor. The one they taught us in school is the ability to do this. By the time you go to a company that is well organized, you will now see that they have prepared an accounting policy, a business policy, giving you a role that might not even look like what we were taught in school. The essence of doing that is for you to serve them well, so that they also use that role to track you and hold you accountable. So these things are dynamic. Okay, let's go on. Thank you, Mr. Lawrence, for that question. It's technical and I like it. Okay. Now, the last person on the list is Mr. Lasisi. Okay, Mr. Lasisi. Mr. Lasisi did not purchase anything from us from the question, but he has an old debt which was brought forward from the last period. So Mr. Lasisi has come to set himself free from us. So click, select Lasisi. Okay, that's his old debt. You can see the nomenclature there, and he's paying by check. So check number bank. Okay, you can mouse, then save, done. So now we are done settling our cost, our vendors, paying them, and we've done receiving money from our customers. What is now left is internal transactions. The transaction that has to do with our internal workings, helping the business, work. So you can what you normally call managerial expenses, operational expenses, or administrative expenses. So let's take care of them. Number one on the list there says rent paid by check to Konga agents. Okay, rent paid on check or by check to Konga agents. So your office rent to your facility manager or to your agents. So this is more like an expense. You go to tax and select payment. Money is going out in full. Money is going out in full. So you select payment. Okay. Here we are. So fortunately, the name Konga agent is in our system. That's it. Just in case the name is not in your system, because in real business or life or environment, it's not every person that comes. You put, let's say you have 1,000 laborers, all the 1,000 laborers are in your system. No, there are scenarios where you don't need to put them in your system. Look at where I am. You come to this place, pay to the order of, just type the name here as on the fly, and that is it. So let's service Konga agents. And Konga, we paid Konga by check. Okay, so we switch to spiritual bank, then check number. Then we are not dealing with items here now, we are dealing with rent. Okay, rent for the year. Okay, now where is this going to? Konga agents have already been linked to rent, so it's another. Then the amount is 12,000. Okay, good, excellent work. We say. Then the second one is that the management of capital enterprise approved a cash withdrawal from bank. It can be for office use. They approved a cash withdrawal, which we see in business. You can move money, you can move cash from your business premises to the bank. On the other hand, you can also move money from the bank to the office, depending on the situation at hand. Maybe we are running out of petty cash. We need to, increase the impress or the float. So it happens. So in this regard, we are moving money from bank to cash. So cash withdrawal from bank of 15,000. Now, this is a journal issue. It's an internal issue. Okay, so we journalize it because it is between our bank account and our cash at hand. Okay, so it's internal. So you go back to tax and select general journal entry. So this is journal 2 UO/0002. The question is now, how do we debit? What is the double entry? Okay, it's simple. Cash is receiving from bank. Cash is receiving from bank. So debit the receiver, credit the giver. Once again, I want to stop momentarily here and ask, am I on the same page with all of you? Are you seeing the screen? And are you hearing me clearly? Please confirm once again so that it won't be like I'm talking to myself. Please confirm once again. Are you seeing my screen and are you hearing from me clearly? Please Just confirm with a text or chat, please. Can you see my screen? And are you hearing me clearly? Please juggle some chats for me. Okay, thank you, Mr. Kano Anyim. Thank you there. Thank you for that response. So I can continue the journey. So in this regard, we'll go to general journal. Anything that has to do with transfer of funds from office to the bank, from bank to the office, or transfer of funds or contract entry, as we call it in accounting, you have to use journal to take care of that. In that journal, debit the account that is receiving, credit the account that is giving. In this regard, cash is receiving, so we debit cash at hand. Please don't forget your narration, so I will use the word control entry. Okay? Okay, the amount is 15,000. Then you have spiritual bank, you credit 15,000. So what is the implication is that the bank, the amount we have in the bank will reduce by 15,000, while the amount we have at hand will increase by 15,000. I'm good to go. Save. Thank you, Happiness Ebere, for that chat. Okay, 2 laptops were bought from Woodland Computers for 30,000 on credit. 2 laptops were bought from Woodland Computers for 30,000 on credit. So Woodland Computers is a vendor, and we are buying 2 laptops from him or her, as the case may be. So you go back to tax and select purchases / receive inventory, because we are buying on credit from a vendor. It can be service, it can be item, it doesn't matter. As long as it is on credit, you go to purchases / receive inventory. So once it opens, select the name of Woodland. Okay. Now, the invoice number you will put here, note this, is the invoice number on Woodland's invoice. Not your, you don't just label it anyhow. That invoice Woodland will give you for that credit purchase, the number on that invoice is what you put here. Then quantity 2, right? Then description laptop. You can see laptop is not in our inventory list. So this, you can see the way I'm putting it. It's not part of our item. We are not buying it to resell. It's just an asset that will enable us work. So Woodland is already linked to laptop account under the setup. Now the question says the 2 of them cost 30,000. That means that the unit price is 15,000. Excellent, excellent. Excellent. So excellent. So we can now save. So it means that we are owing Woodland 30,000, while our assets has increased by 30,000. So you can see the system will credit account receivable account payable. Sorry, the system will credit account payable because we are liable to Woodland, and the system will debit our asset account by name laptop. So save. Okay, a Toyota car 2017 edition was bought from Toyota Motors for 300,000. For 300,000. Okay, that money might be much. I don't want to. So let's leave it as 30,000 too. Let's reduce this amount to 30,000. It might overshoot our cash balance. Okay, so you bring down the name of Toyota. Then the invoice is the invoice on Toyota's source document. So how many? Just one. So Toyota Motors. Okay. Unit price. So just 30,000. Yeah, 30,000. So we are good to go. You save. Okay, electricity bill of 10,000 was paid by cash, okay, to an agent. The name of the agent is not known. So this is the type of transaction we call one-off. Like if you go to all these departmental stores to make purchases, you notice that they don't even ask you your name. They will just print out. And if you look at this payment slip, it's having a generic name, customer or transaction permanently on it. What we are to most of these departmental businesses are on the fly customers or one-off. Okay, the same thing happens in every business. So it says electricity bill of 10,000 was paid by cash to an agent. So we paid an agent by cash. Okay, now the name of the agent is not known, so it is an on the fly. Now what you do, you close this, go back to tax and select payment because we are paying in full. Okay, the person is not in our database, so we don't need to bother. Now you come to this place, watch, and put, let's look at favorable name. Let's look at I can call it vendor or agent, or still use the name agent. It's just an on the fly agent. It can also be, in most cases, it can be a staff who goes to, pay that electricity bill on our behalf. Just put the staff name there. It doesn't mean that the staff name will be in your database. No, just manage the staff name as on the fly, the way you see here. Okay, it was paid by cash. Then the payment, the slip, you can put the number of the slip there. Then change your account, cash account to cash at hand. Then now enter the information, electrical oil bills. Then now see where this is. Now watch, you can see that there's no account linked to this agent. You know why? Because it's not in the system. So what you do now, come down to where you have GL account. That is, GL means general ledger account. Click, go down, then look for electricity bill. You see it now. I have linked this agent to the right ledger where that money should be posted to. Then you click on amount and type 10,000. Yeah, so we are good to go. Save. Now a check of 65,000 was approved for March salary. I think now a check of 65,000 was approved for March salary. 25,000 goes to Musa. Okay, then the other 20,000, then and the 20,000 also to the last employee. So I shared it 25, 20, 20 for the 3 workers. Now you come down to, you can use journal for payment of salary. You can use general journal to do it. You can use general journal to do it. That is where debit and credit. Or on the go, you can use payment. You can still use payment or write check. You can use payment or write check. They are just the same thing. So I'm going to use write check this time around. Good. So now the name of the first staff. Yes, this is Musa. So I'm using it as on the fly because they are not in the data. I'm using that on the fly. So Musa. So it's being paid by, all of them were paid by cash or by check. Yeah, it says check. So the check number issued to him, then the spiritual bank where the money will be extracted from, then the amount 25,000. Then your narration being salary for the month of May. June being salary for the month of, let's say, June, or the month of June. So for being salary for June, okay, then you now select the salary account where the money goes to. So the name of the staff, the date, the amount, the narration, and the amount, the salary account where that money goes to. Now, if you look at this closely, you see that there's a split here. Okay, I can be paying the three of them at the same time using this split. Okay, but let's leave it straight down to salary. So I'll click. Then the second name of the staff, we have D'Ambrose. We have 20,000. Stay by check. Expense account. Salary. Then you now make your narration. Okay. Then you save. So we have taken care of two of the staff. We have paid them their salary for this month, and it's coming out of our bank account. So the next one here says Woodland Computers paid in full by check for the two computers. Remember, we had computers we bought from Woodland at 30,000 naira for the two of them. Now we are paying them in full. Just straight line. You go to tax, select payment because we are paying our vendors. Call up Woodland. That old debt you are owing Woodland will show. You can see it here now. And the question says it was by check as well. So the check number. Then it goes to spiritual bank. Then your narration and full payment. It is full payment we are making to him. Okay. So here is it. Then save. It simply means that we are no longer owing Woodland. Okay, we are no longer owing Woodland. So let's take a walk around the software before we answer the last question. Then I'll go back to a question that one of us asked yesterday concerning discount received and discount allowed. I hope he's here today. Okay, one of us asked a question on how to effect discount received and discount allowed, and I hope he's around so that I can demonstrate that. Okay, so let's look at our report so far. Okay, so far so good. I'll start from the home page. You see what is going on. See, my home page is reacting. You can see there. Look at the graphical representation of my profit and loss. You can see the summary. You can see the summary of my profit and loss. Okay, you can see the gross profit, total expenditure made. I'm having a net income of 400. Okay, good. You can also see the my account balances, vendors for the last 12 months. Okay, so this is more like the graphical visualization of what I have done. So let's dive into the reports. This is profit report and forms, financial statement. Let's start with the balance sheet. This is my balance sheet. This is my balance sheet. You can see my balance sheet. See that net income of 400. You can see the balance sheet. Now, if you want to know how, okay, so let's go to, so I will, since you already have the software and you can do the work, I'll allow you, going through the reports. Allow you. So let me look at our P&L. So standard income statement. Okay. So this is it. You see how we arrive at the 400. Total sales is 132,700, less cost of 65,300, giving us a gross profit of 67,400, less the expenditures in having a net income of 400 naira. So Mr. Joshua Paul is asking, apologies sir, on payment of salary, is it possible to post payment of more than one staff at the same time on the software? Yes, it is. Yes, it is, Mr. Joshua. Please let me create a line of departure. In as much as this will serve a very wonderful purpose to most of us. Okay, this is the intro, with more of a foundational class, okay, which has some touch of master class in it. Okay, so what we are doing is that on that computer accountant platform, the foundational classes are free the way we are doing it right now, while the master classes are paid classes. So in the master classes, we look at this in a multi-dimensional way across different business lines, construction, NGO, service, manufacturing, production, across many different business lines. So that's the difference. But this is a very solid foundation to, launch yourself from. Okay, good. Please, I hope all of us are on the same page. Please don't forget once again to subscribe on our page. We appreciate your being part of us. Don't forget to share. Don't forget to like. Don't forget to comment. Don't forget to subscribe and share to friends, colleagues who might need this information too. Okay, because a whole lot of coppers, a whole lot of graduates who in this modern age don't even know that there is something called accounting software. It is shocking sometimes when I counter coppers and ask them, have you ever heard of anything called accounting software? They say no, they've not heard of it, and they've passed through the walls of the university. So this information will be important to them. Send it to them, especially most of them who are accounting graduates. You go to offices, you see non-accountants using this software to perfection to work. So a labor market is not zero to only a particular individual. Today, I am a project manager, so I cannot wait for those who did project management in the university to come and no. Once you understand the process, the procedure, you can use it to deliver deliverables. Then you are good to go. I don't need to wait for those who study project management in the university. No. So this is how knowledge is. Knowledge is there for everybody. It is there for the taking, and nature abhors vacuum. So if you're an accountant, you create vacuum in terms of tech. Non-accountant will take your job, and life goes on. Nature will owe you no apology. So share, subscribe, share to as many as you want to benefit from this, especially our brothers and sisters who are in the accounting or in business management courses. Thank you once again. So any question, we are on the last lap. I want us to look at account payable and account receivable reports. Then I will use it to answer the last question. So you can also look at your trial balance. If you go to general ledger, this is your trial balance here. General ledger trial balance. Look at it. Perfect. If your work is perfect, everything will be perfect. If you garbage it perfectly, everything will come out perfect. You can see I can sleep and be happy that I have done a near perfect job. Then let's look at accounts payable and see the report of those we are owing. Okay, from the list here, you can see that these are the people we are indebted to. So we have Toyota Motors, Vegas, and Viva. So we are owing these vendors. So you can also look at it in terms of vendor ledgers. So look at it, how we arrive at the debt. So total debt we are owing is 54,800 from these three. The agent showing zero. Woodland is showing zero because we have finished paying Woodland. We're not owing anything to the agent. Okay, so this is how it is. Now, the last two questions says Woodland Computers was paid. Okay, Alfred said, I'm joining the class now. It was due to heavy rain in Accra, Ghana. Please, can I get the playback? Yes, the video is always on the YouTube there, Mr. Alfred. Please, you don't need to worry yourself. The video is already on the YouTube. Once I'm done with this live stream, you can access the video. Okay, sorry for the rain. This nature happens. Nature owes you no apology. Okay. So if you look at the report on my screen, it shows that Woodland has been fully paid from the question. Now, but the last question said check paid to Woodland Computers was dishonored by the bank. Maybe one or two issues must have happened that the bank has dishonored the check. It simply means that now that the check has been dishonored, what the implication is that we have to reinstall Woodland back in our record as a creditor. Our record must show that we are still owing Woodland. So how do we effect that? Here it's showing that we have fully paid him, but let's see how we effect that. I'm going to minimize this. You go to tax and select void checks. Void checks. Look at it here. Okay. So which check are we voiding? The bank has just voided the Woodland check and he has returned it back to us. Okay. So this is it. So void check. I'm voiding the check paid to Woodland. So are you sure you want to void this? Yes. Then you close. Let's go back to Woodland account. Let's go back to report account payable and see if Woodland has been restored back. Did you see? The 30,000 has been returned back. Woodland has been restored back. Okay. Woodland has been restored back to this amount. Okay. Yeah. So that means that we are still owing Woodland because the check we gave him to go and cash from the bank or, take care of or effect has been dishonored. So he has returned back the check to us. What a good accountant will do is to restore him back into the system as a creditor, which we have done using the void check. Good. So any question? Do we have any question? I think we have done justice to all the questions. What is now left is the discount allowed and the discount received, as well as remitting VAT, to the tax authority. So these are three things we have. Do we have any question? Okay, Mr. Alfred is asking how much does the masterclass cost? Please, Mr. Alfred, I don't know if you are part of the WhatsApp group. All of these things will be updated on the computer accountant, analyst, and project management WhatsApp group. So I don't know if you are in the WhatsApp group so that I can copy and send it to you right away. Good. Mr. Kano asked a good question. Mr. Kano Anyim, that's a good observation. He said, what if a customer's check is dishonored? That's not your headache. Your headache is your vendor. Because remember, you paid your vendor, you have paid him money, and the bank says we are not going to honor it. He will return the check back to you. So if a customer pays me and I go to my bank or I go to cash the check and his bank refused to pay me or dishonor it, I will return the check to him. So it is left for the customer to update his account with me. You understand? It is left for the customer. Remember, then it is left for the customer to update his account with me. You are not going to void it. Now do is to reinstate the customer back as a debtor, okay, manually on your Sage. But the voiding of check is in the customer's side. Not all I have to do is to return the check back to him, because it is when you have sorted the check that you can come to your own software and now remove him as a debtor, recognize his payment. And this is the mistake I have seen a lot of accountants do in business, and fraudsters has also cashed in on this. Now, if a customer comes, let's assume I'm the accountant of, we have to be careful as accountants. Let's assume I'm the accountant of Capital Enterprise, okay? And I'm paid, a vendor pays me. I cannot run to the books and start updating my books until that money hits our own account. There has to be some patience, because the check he gave you is an evidence, but it has not materialized into a substance. The check is an evidence that he's using a third party, which is his financial representatives, to pay you, which is the bank. But I've not seen the substance, which is the money that will drop in our account. So let's assume he gave you a check, and you went ahead and clear him from your system. Then all of a sudden we now discover that the check is not even a good check. It's a dumb check. What do you do? And the customer is nowhere to be found. What do you do? So these are those intelligence and basic intellectual we have to bring into what we are doing. Okay, I don't think your manager or your boss will be happy to hear that you did not follow up with due diligence. Okay, and this happened to us. I don't think he will be happy with you. Okay, the substance is the money hitting our account first. The check is an evidence that I want to pay you through this medium. So once I cash the check and the money is in our account, okay, then what I will do is now to come back to the office and clear him, so that I have two things on my hands: the check as an evidence of payment, the money in our bank account, no longer in his account. So we have to, that's why I said an accountant must be a highly emotionally intelligent person. Substance is key. Remember, there's a policy that says substance over form. The evidence is the formality. But what of the substance? I have not seen the substance. Why would I clear you based on the evidence? So I have to see the two. As an accountant, I have to be 100% sure that this transaction is closed. Unless my boss will now come based on his authority and say, go ahead. Remember, it's not your business. Unless my boss will give me that authority to go ahead and clear him, whether money drops or not, then that's no longer my problem. I worked based on your approval. But how it is this. So if you give me check, I cannot come to my accounting software and clear you, because I've not seen the substance. What you gave me is just a form showing that this is the medium through which you want to pay me. I have to see the substance, which is the bulk money that will hit our account. Then we can now sing hallelujah at the end of the day that everybody is sorted out. So that, Mr. Kano, that's my answer to that question. Okay, so Mr. Alfred, please, I don't know if you're in our WhatsApp group, or you can send me a message. You can send me a message on this WhatsApp. So I'm going to drop a line so that you can use it to. So that's the line, Mr. Alfred. That's the line you can use to. It's also my WhatsApp number you can use to reach me. But if you are in our group, in our WhatsApp group, then you can have access to the information that I will definitely drop there. Okay, so any question, please, so that I can take care of the last three issues we have. Do we have any more questions? Do we have any more questions? The report, I leave, the report will be your assignment. Take your time and scroll and look at it. Wonderful reports. Let me take you to the inventory report. I think that's the report, the last report I will look at. Let me take you to the inventory reports. Go to report and forms. You go to inventory. This is one software that I have seen that has very wonderful ways of reporting inventory. Okay. So you have inventory unit activity report. It shows how stock came in, okay, how we've sold them and what is remaining. You can see it. For hair cream, we started with the beginning balance of 3 items. We bought 10, okay, we sold 10 and it's remaining 3. For body lotions, we purchased 20, we sold 10, it's remaining 10. You can see. It can also show you how you have made profit from each item. Okay, inventory profitability report. Look at it. You can see this is how each item has contributed to our gross profit. So I leave you with it. You enjoy it sitting down to look at different reports this application can offer you. I think this is where it has a little upper hand over QuickBooks, but they have their unique selling points. What I know is that every software has their unique selling point. So, Mr. Alfred, you can. My number is on the chat there, so you can communicate with me. Please, I also want you to be part of our WhatsApp group because this information will be updated there soonest. So for those who want to get in touch with me, so my number is already on the chat please there. Okay. Good. So let's look at how to remit VAT. First of all, we have to find out the VAT collected. Okay, we have to find out the total VAT collected. So I'll go back to report and forms, financial statement, balance sheet. So let's see the total VAT. Look at it. We have collected approximately 9,052 50 9,952 and 50. So that's what we have collected. Our VAT collected, and our duty is to remit it to the tax authority. So how do you do that? You go back to tax and select payment or write check. More importantly, select write check. Then come down to your vendor ID database, select the tax authority. Then you are remitting it by check or through the bank. Then you can see it's already linked. Then you type in the amount 9952.5. This is what we are remitting to the tax authority, and boom, it's gone in. Let's see if that liability is still in our balance sheet. Let's check. Yes, our balance sheet. Let's see. Did you see? So I'm going to close this and reopen it again. Did you see? The VAT has been remitted. It's no longer here. The VAT has been remitted. So we are no longer owing the tax authority. VAT taken care of. Okay. Now, how do we charge effect discounts? How do we effect discount? Okay, how do we effect discount? Both discount allowed and discount received. Okay. Okay, so let's go. So it might interest you to know that discount allowed are managerial rule of thumb or managerial decision used most times as an incentive to encourage the customer, one, to pay up on time, or as an incentive given to the customer for bulk purchases. Okay. Now, then while on the other hand, discount received is also an incentive we benefit by transacting with our vendors or suppliers. The first thing you have to do, they are all ledgers, they are accounted. The first thing you have to do is to set them up as ledgers. So how do we do that? We started it yesterday. You go to maintain and select charts of account. So we had a numbering system. Where did I stop yesterday? Number 15. So 1016. You have discount 1016. You have discount, sorry, capital letter. I'm sure all of them are in capital. Discount allowed. The discount allowed is an expense because based on prudence law, it says make provision for all possible losses. So when we allow discount to customers, we are losing. So prudence law says we should make provision for such loss. So discount allowed is one of those examples that make us to lose money, giving incentives to customers. So prudence law says make provision for all possible losses. So that provision will end up as an expense. We expense this money. Okay, then save and new 1017. So we are looking at discount received. Discount received. Then you have, it's an income because we are benefiting from our vendors. They are losing value. We are benefiting value by getting a reduced value to pay them. So select income, save, and let's check our list once again so you can see our accounts are updated. Now, I've had somebody ask me this question. You can see that capital account is in red, right? Income is in red, and account payable is in red because automatically account payable shows that you are owing, so that's why it shows red. Capital shows that this is not your money, it's an investment that you have to return back. Okay, so that's it. So let's juggle. So save and close. Now I'm going to call back some of these transactions and apply discount on them. So let's pay somebody. There are two ways to apply discounts on accounting software. Number one is on the spot. On the spot where you are doing the transaction, you can apply discount, or you can apply cash discount at the point in a scenario where a customer is coming to pay. When a customer is coming to pay, you can apply discount. Please note this. The first layer of discount can be transaction discount. Maybe at the point of buying from us, we say, okay, let's discount this amount. Or we can also apply discounts to encourage customers to pay. Let's look at the two. Right now. So I'm going to create a new transaction. I'm going to invoice somebody. Let me invoice Lasisi. Okay, invoice number 5. Lasisi is buying, how many items do we have? Lasisi is buying 6 body lotion. Okay, tax added. Now, based on business relationship, Lasisi can say, we must give him discount, he's a good customer. Okay, yes, Mr. Khan, we have net of input VAT already. So Lasisi can say, Oh, based on the relationship, I cannot pay 16,125. Please give us discount. Then the management will say, okay, give him 1,000 naira discount. Okay, so I'll come to description and type discount allowed, right? Now select, now watch this, go to discount allowed account, select it, because we are allowing, we are the one losing. Okay, Mr. Lasisi is benefiting while we are losing. Then now say minus 1,000. Did you see? Let me do it again. The total amount initially was 16,125, right? We are giving him a discount of 1,000 minus 1,000. Now what do we have? 15,050 naira. Okay, so that's what we have left. Okay, then I can now post. Let's see the report. Let's see the effect on our report. Good. Let's go to report, income statement, financial statement, income statement. Where are you? Here you are. Okay, now look at that one. Did you see this? Look at that 1,000 seated in our expense, because it's more like a loss to us. Let's check if his money entered here. The VAT has gone to the balance sheet. His VAT has gone to the balance. That one is resting in the balance sheet. You see how this? You see the expert, knowledge around these things. Once you know how to navigate your way, you can effect any business transaction on this. Now let's assume now he wants to pay. Watch this again. Let's assume that after like 2 days, 1 week, 2 weeks, he wants to pay us. You go back to tax and select receive money. We are receiving money from him. That is Lasisi now. Okay, look at that money. Now I can offer another discount here. Okay, I can offer him another discount here. Look at it. They are two different. That one is trading discount. Okay, just to encourage him to pay. I can ask, okay, since you want to pay, I take another 1,000. Did you see? What he will now pay us is 14,050. Another one, so I'll say, okay, please link it to discount account. It's somewhere around here. Discount allowed account. Yeah. So let's go. Boom. It goes in. Let's check our report and forms again. Here is it. Okay, see. You see my discount now 2,000. My discount is now 2,000. You can see. So the first one. Now you can also be dynamic by sending this discount to the trading account. Yes, I can send it to the trading account. It will affect sales. It will reduce sales. So this is on the customer side. Now let's benefit on discount received from the vendor side. Let's do that, both trading and select purchases / receive inventory. I want to make some I used here. Link. So let's buy 10 red shoes from him. Okay, so at the point of making this purchase, links and say, okay, well, please give us discount. Give us discount. So have discount received, right? So look at it. Is discount received account, discount received. Then it means that if he's giving, it means we'll pay lesser, right? So minus, let's say 1,500. Did you see? Instead of 15,000, we will now pay 13,500. So that's the effect of the discount, trading discount basically, or bulk purchase discount he's giving to us. So you click next. Let's see the effect. Let's see the effects immediately. So I'll go back to financial statement, standard income statement. Did you see? You can see our discount received, which has increased our income. So you can see. So this, one of us did ask this question, and I admired it very much that yesterday. I loved the question when it came. So you can see that they are applicable. You can apply them and still navigate properly. Okay, so everything works out as long as, please, accountants on this platform and will be accountants, you have to understand your constitution very well. You have to understand the accounting principles, the accounting laws, the fundamentals, the concepts, okay, the principles. They are key to especially your double entry. The periodicity law, the historical cost, the going concern, the money measurement, the business entity law, all of these things, they come back to aid you to post properly. Yes. Okay. Any question? Any question, please? We are on home stretch. Any question? Do we have any question? Once again, please don't forget to subscribe. Don't forget to be part of us. Please subscribe to our YouTube page. Don't forget to like. Don't forget to comment. Don't forget to share to as many as you want to be touched, to gain from this information we are dishing out. So any question? Do we have any question? We are just on the home stretch. But that doesn't mean we are also open to your questions, to your inquiries. If there are any feature here that is giving you problem, please, once in a while, we'll open our WhatsApp group. The essence of shutting it down so that people don't take advantage and be posting things that might offend the sensibility of others. So we will have to control that. But I'm dropping once again my private WhatsApp line. Once you have questions, once you have issues in the process of doing this, please private chat me on WhatsApp. And if there is need for us to do a video on that so that others can benefit, we can also do that. I don't, Mr. Oladoye, I'm not putting the accounting laws above the process, but both of them they must go together. In short, by the time I remember, my first degree was accounting. So when I graduated, I realized that there's a problem, but I have to go back. So you can't be in a country without understanding the constitution of that country. That you are living peacefully in Nigeria is because you are obeying some theoretical laws, some laws written on paper for you. Mr. Adedoye, Oladoye, right? Mr. Oladoye, MKO. Why are you living peacefully in Nigeria? Because you are obeying some theoretical laws. You are putting it into action. So accounting laws are theory in nature. But when you start posting, when you start opening your books of account, that theory becomes action. What I'm simply saying, make way to understand what that theory is actually saying, especially the double entry. Okay, you must understand what it's talking about. When you talk about, why are we recording what we have here? Because we are seeing it as a going concern. Some of us have heard of Diamond Bank. Okay, Diamond Bank is no longer in existence. Why? It is no longer a going concern. If I pay you with Diamond Bank's check, you will not take it. You understand? Access Bank is still alive. You know why? If I give you Access Bank check, you will collect it. Why? Because it's a going concern. Okay? It is still in operational existence for the foreseeable future. So Access Bank still have a future. Why do you buy shares? You buy shares because that company is a going concern. It will be there for the foreseeable future. So I have to invest to be part of that foreseeable future. So Please, once in a while, juggle your textbooks. It helps to understand some of these things. Don't leave the understanding of what you are doing to the software. The software is garbage in, garbage out. But with those theoretical knowledge, you can understand exactly what you are doing. Okay, Mr. Chika is asking, please, can I use it on school fees, capture, and salary? Now, this is what I'm going to do. The payroll we have here is not expansive. Please note this. I'm going to do a full payroll video on Sage 50. Okay, it's not expansive. It's just paying salary direct. I'm going to do a full payroll where you can make deductions, deduct what you have to remove from the salary, like payee, health insurance, and the rest, and pay the staff net. So what we have here is just a straight line payroll. Just pay them what is approved and they move on. So that is it. Thank you, Mr. Oladoye MKO. I hope it's not MKO Abiola. Thank you for your appreciation. Please, accounting is the sweetest course I've ever seen. You know why? If you understand business and understand the laws of accounting, then understand accounting, you are on top of the world. Okay? You're on top of the world. No matter whether you're a professional or not, understanding these processes makes you a great accountant. There's no solution you cannot find out. The work of the software is a tool that will garnish your creativity in exploding with quality accounting knowledge. So thank you very much. I think we have to call it a day here. This is 12:15. Thank you so much. The video will be online. Please don't forget to subscribe. Don't forget to share, comment, and don't forget to join our WhatsApp group. The challenge will be shared on the WhatsApp group. The information and the update on the challenge will be on the WhatsApp group. So if you have not gotten the WhatsApp group, I'm putting up my number right now. So you can private chat me on this number so that I can add you on the WhatsApp group. So thank you so much. I'm grateful that for the opportunity you have given us to add value to you. Please continue to hang around after the challenge. Okay, we are going directly to Sage 300. Okay, then business analysis, data analysis, and project management, just like that, and we come back to QuickBooks again. Okay, Mr. Oladoye MKO, please, I want total lecture on payroll because there's on the my number is there. Private chat me. Okay, so that Oladoye, forgive me, Oladoye. So private chat me. My number is there. Then we can take it. So any other question you have, please private chat me on that number 070630029998, and be rest assured that by God's special grace, your answer or your solution will be delivered to you. Thank you once again. Thank you, thank you, thank you. I'm most grateful for your attention, for your presence. We celebrate and appreciate all of you. Thank you, and do enjoy the rest of your day. Bye. I'm using round between. Look at it. I'm using round between. So it's going to change. No, I use round between. And they are the same. Sometimes that was like that.